Assalamu alaikum friends, welcome to lecture 5 of AFM. Today we are going to cover adjusted present value, which is also known as APV. Now this was not explained in your financial management. This is something which is there in advanced financial management, and whatever the topics that are taught in AFM, which is not there in financial management, has more chance of coming in your AFM exam because they want a test, right? Because they have not been tested in financial management. And regarding your net present value, that was the first lecture under investment appraisal I started with, right? With your net present value, sometimes they give adjusted present value also. Sometimes it's just net present value, okay, that you have to calculate. But most of the time, you can say around 60 to 70% APM comes. When net present value comes, adjusted present value also comes with it. As a, you can say as a 50 marks question or as a 25 marks question. It can come in anything. And this lecture is going to have lots of calculations, lots of questions that we are going to attempt here. So the length of this lecture also will be pretty long, okay, because we have much more of calculations than theory part, more of calculation than discussion, but we have some things which we need to discuss because even though this is a very calculation question, I mean numerical type of question, but also remember that you will be asked the discussion question as well, so you should know what to discuss. Okay, so let's start with what are we going to focus in this lecture. Two areas. One is risk adjusted WACC. This I have covered it in previous lecture. This is just a revision because from there we'll pick up. And next is adjusted present value technique. So let's start with risk adjusted WACC. This I've covered in previous lecture, also lecture number 4, but here I'm going to do a revision again in case you forgot. And by the way, if you have not watched my previous lectures, please do go and watch those lectures, especially the first lecture, that is net present value. You need to watch it. You need to know how to calculate net present value, because for adjusted present value, you need net present value. Without net present value, you cannot proceed with adjusted present value. It will be partial. You need the support of net present value, and that is there in lecture 1. And it's my advice that follow the lectures in order. If you're watching my lecture, if I'm a regular subscriber, you know that there's a playlist and you'll be watching. This is the 5th lecture. But if you are a new subscriber, I do have a playlist on my YouTube channel which is named as the date is given September 2022 to June 2023 AFM lecture. So till now I have 4 lectures. This is the 5th lecture. Okay. So let's start. These are the some steps I have noted. This few steps that you need to calculate a risk adjusted WACC. These are the 6 steps, okay, and it needs to be done in this order. Step number 1, whenever you have to WACC, you have to find a WACC, right? Use equity beta from a similar company that is quoted. Obviously you will get a beta for a quoted company. Unquoted company they will not give. Quoted company betas are only available. Which beta? Equity beta, which is similar to you, because you want to find your equity beta, right? To find your cost of equity. To do that, you first have to find a suitable quoted company's equity beta. Take it. Second step, can you just take as it is equity beta and use it in your company? No. Why? Your company has different business risk. Your business has different financial risk. There are two type of risk. One is business risk, which is measured by asset beta. One is financial risk, which is measured, or geared risk is, you can say, which is measured by measured by equity beta. So your company has different this thing. That's why you need to adjust that equity beta once you take it. How do you adjust it? You convert that equity beta to asset beta. That is known as D-gear. And there's a formula also which is there in your formula sheet. We went through this. We did a calculation on this. How to turn asset to equity, equity to asset. That's why I tell you need to watch my lecture 4. But anyway, we are going to do that de-gearing, re-gearing here also. Okay. Remember, WACC is an area that is so critical for your AFM, because you will get it everywhere of the syllabus. As I told you, either you can get it in net present value, you need, because you have to discount cash flow. You will get it in adjusted present value. You can get it in mergers and acquisition. To find the value of the company, you have to discount the cash flow. And for reconstruction and reorganization, you see, Almost in all your whole syllabus in AFM, WACC is required. So you cannot skip WACC. You have to be very comfortable with de-gearing, re-gearing. If you're not, make sure you do enough questions. There are plenty of questions in revision can just pick up and do. Re-gearing and gearing. You should be able to convert equity to asset, asset to equity. Okay, so you convert it into asset beta. Okay, formula is there. Number three, after you do that, you get that asset beta, take that asset beta and then again change it to equity beta by using your own gearing level, your company's debt equity ratio. That is gearing level. That is known as re-gear the beta. Fourth step is whatever that equity beta you got, use it in your CAPM, CAPM equation, capital asset pricing model. After that, you will get a cost of equity. Use that cost of equity or KE, okay, cost of equity or KE also you can say, to find the WACC. What is WACC? WACC is simply cost of equity plus cost of debt. Okay. Cost of debt is a little bit easier to find out because in cost of debt you don't have to do this re-gearing, gearing, all those things. But for cost of equity you have to do. Okay. Cost of equity has more working. So this are the five, and the last one is evaluate the project. How do you evaluate the project? Whatever the net present value you get, if it's positive, based on that WACC, you accept. If not, do not accept. Now, before I go to the adjusted present value technique, let me do a small question. Test your understanding one. Okay, let's do this gearing, re-gearing, and find a WACC. Risk adjusted WACC. Why? Because you are adjusting for your company's risk. That is why it is known as risk adjusted WACC. So let's do. So now, in this, you are supposed to find a suitable cost of capital to apply to the project. In your exam, main exam in AFM, this is how things will be. They will give you all the things. You just have to use the formula. You should know the 6 steps and just do it. This is one of the easiest. If you're asked to find WACC, it's one of the easiest. So let's see. B company is a hot air balloon manufacturer whose equity, all those things is this focus on the number more than the information and all. Okay, hot air balloon manufacturer whose equity to debt ratio is 5:2. 5 is equity, 2 is debt. Okay, or you can write ED. Company is considering a waterbed manufacturing company project. B company will finance the project to maintain its existing capital structure. S company is a waterbed manufacturing company. It has an equity, so this is another company. Okay, waterbed manufacturing company. He's into waterbed manufacturing company. This is hot air balloon manufacturer. It has an equity beta 1.59 and VEVD, that means equity to debt 2:1. So you have been given the equity to debt ratio of both the companies, equity beta of the similar company, right? The yield on the B's company's debt, you will be given the debt also because you want WACC, cost of equity as well as debt. So yield on B company's debt, which is assumed to be risk free, is 11%. Equity beta is 1.1 for whom? B company. The average return on the stock market is 16% and corporation tax is 30%. Now tell me, how do you start? You know your step one? You know your step one? What is step one? Use an appropriate company's equity beta. So in this case, don't go and use this 1.1 thinking that 1.1 is already given for B company, so we'll use it. No. You have to adjust it. You have to take a similar appropriate company's equity beta, which is 1.59 in this case. So 1.59 equity beta of a similar company that you are using. Okay. They will not write every time that this company is appropriate company or a similar company or no. You have to see. Obviously, they have given the facts of another company, means that's a company's information you have to take. Otherwise, why will they give? Okay. And they will not give more than one company's information to confuse you. It will always be another company or two companies only. One is the main company whose cost of capital you want to find. The other one is the similar company. Step 2. This is equity beta. You have to adjust this. Okay. Step 2. What is step 2? What is step 2? Find asset beta. Using this equity beta, See, always you need to do this in this step only. Step 1 has to be step 1, step 2 has to be step 2. You cannot do step 2 before doing step 1 because you need step 1's input in step 2. Okay, so asset beta, you have to convert that equity beta to asset beta. That means remove their financial risk from it. How do you do that? What is the formula? Formula is already given. I'm writing it here again. Asset beta is equal to equity beta multiplied by value of equity divided by the equity plus debt. Debt will be 1 minus tax because we know that after tax, right? Tax deductible. Interest is tax deductible. So this is the formula that you have to use. Equity beta you know is 1.59 multiplied by equity and debt. Which ratio you have to use? This ratio. Not your company, not 5:2, 2:1. The similar companies. See, for step 1, it's very easy. This is how you remember. Step 1, you have taken the equity beta for similar company, or I would say appropriate company, S company. For step 2 also, when you are taking the ratio, debt equity ratio, their company's ratio only you have to take. Okay, not your company. Your company later, when it comes to re-gearing. Now you are de-gearing. First de-gear. So it's 2:1. So 2 plus 1 and tax is 30%. 1 minus 0.3. So do the calculation. Okay, make sure that you are able to do this 1. Okay, remember this 1 needs to be multiplied by this before you add with 2. This you should know bottom-us, okay? I'm telling you this because many of you don't know. So 1.59 you keep it here to 1 into 0.7. So it will be 2 plus 1 minus 0.3 is 0.7, 0.7. Because 1 into 0.7 is 0.7. So it will be 2 divided by 1.59 into 2 divided by 2.7. Now things will be easier. Okay. Now it does not matter whether you first do 1.9 into 2 divided by 2.7 or first do this then multiply. It does not matter. Division and multiplication, you can do it in any order. But when it comes to addition and multiplication, addition and division, subtraction and multiplication, subtraction and division, then you have to think of the bottommost rule. What needs to be done? First multiplication, then addition. Remember it. You should know this. Otherwise your answer will be wrong. Okay. And your asset beta will be 1.18. I told you in the last lecture, always check whether you are right or not. How do you check it? Asset beta should be less than your equity beta. Equity beta is 1.59. Asset beta is 1.8. So you are correct. Technically you are right. Maybe figure wise you could be wrong. But imagine if it was the other way around. If your asset beta was more than 1.59, you definitely know something is wrong. It cannot be. And most of the time when it's wrong, let me tell you this from experience, I'm telling this, it is because your calculation is wrong. It's not because you have wrote the incorrect things and all. You got the calculation correctly, everything you put in the formula correctly, your calculation. What you're putting in this thing. Maybe you are first adding, then multiplying. So depends on the way you are doing the calculation in your calculator or Excel. Okay. That's why I'm telling you, be very careful. Don't throw away the small marks. Then comes to step 3. 1.18. Okay. Now convert this asset beta again to equity. So are you understanding what you're doing? First you are taking equity beta, converting it into asset using the similar again you are converting this into equity, but this time you are using your company's ratio, debt equity ratio. This is what you are doing. This is the whole scenario. First equity, then asset, convert to asset, then again to equity. So step 3 is you are doing it. Same formula. But this time asset beta is given 1.18 equal to equity beta you need to find out E. Okay, is 5:2, right? Because your company's ratio 5:2, 1 minus 0.3. Now there is a problem here. If you think this is not the subject of your equation, so what should you do? You cannot take it the other side. Left side, if you take, this becomes negative. Keep the equity beta as it is. This thing Okay, this whole thing, take it to the other side. When it becomes to the other side, remember reciprocal. What is in the numerator becomes denominator, what is in the denominator becomes numerator. That means division becomes multiplication, multiplication becomes division. Other side, when you take, sign changes. Okay, so this time it will be 1.18 multiply, you cross multiply this with the bottom. So 5 plus 2 into 1 minus 0.3, the bigger bracket, divide by 5. This is what's happening in the picture to find the equity beta. And once this is done, okay, your equity beta, I'm just telling you the answer. Make sure that you do the calculation. Okay, it will be 1.51. Again, check whether this is correct or not. Why? Because this is more than 1.18, which is asset beta. So technical is right. Most of the time when it's technically right, means it's right. The answer is right. Should be. Because your calculation is based on your this thing. I mean, how can you go wrong? You are just taking the information from the question and just using a formula. Unless you are putting the formula incorrectly and doing something wrong there, then things might be wrong. Otherwise, most of the time, students are correct here. But this needs a lot of practice because it's very easy to get confused. Equity beta, asset beta, which one? Sometimes people get confused with equity beta of asset beta. It's confusing. Practice is required, otherwise this is very easy. It's not very complicated. Okay, now what else? This is what you wanted. Use your CPM. Go ahead, put it there. What is the formula? Unit risk-free rate. Risk-free rate is 11% plus equity beta is now 1.51. This one, not this 1.18. This is the asset beta. You want equity beta. Then what is the market return? 16. Okay, minus 16% minus 11%, which will give you, first you need to multiply this 1.51 with this difference and then you add with 11%. Okay, which will give you 18.55%. This is cost of equity, by the way, which is your KE. You have to still find your cost of debt. Before that, let me just go up a little bit. Okay, this 16% is average return on the stock market. Okay, when they say market premium or risk premium, market risk premium, let's say 16 minus 11 is how much? 5%. Let's say they have given market risk 5%. When they have given things like this, take this 5% as it is. No need to minus with anything, risk-free rate. Okay, no need to minus it with risk-free rate. You cannot minus it also. Look at this one, 5 minus 11, it will be negative. But anyway, you should never minus it. If it's market risk premium, what is there? If it's market return, okay, return, you need to deduct this from the risk-free rate, 16 minus 11. Return minus the risk-free rate. Okay, because they can give the either way. Now, cost of debt. And definitely some of you might be thinking, why I'm doing this here, why not in CV platform, why not on Excel? Because anyway you are going to do it in a CV platform. So that, for that also I have an answer, that the final question, okay, we have an exam standard question on this topic, which we are going to do it on Excel on your CV platform. I'm going to show you how to do that. That whole question I'll be doing on your CV platform. And good thing is there you will learn the formula and you will go through lots of things. The handy items, how to handle with it, deal with it, right? But since this is a little bit early for you, we have just started with questions, early stage, let's do it manually first, unless you get the hang of it. Once you are okay with it, you can do it in Excel. So what's cost of debt? What do you do? You first need to understand, whenever you're finding cost of debt, is it redeemable debt or irredeemable? Ask this question to see whether what is it written. Which is assumed to be risk free. Yield on the debt. This means it is irredeemable. Otherwise, they would have given you. that this is a loan, this is a bond, this is a redeemable time. If they have not mentioned anything about redemption period, or loan is going to be paid in 5 years, bond is going to be redeemed, that means it is irredeemable debt. That is the assumption, right? It is an irredeemable. For irredeemable debt, what is the formula? How do you find the cost of debt? I've covered this. I've covered this in the previous lectures, previous few lecture. You have to see. I don't remember the lecture number, but when I did cost of debt, we went through the types of debt: cost, redeemable, irredeemable. It is I, 1 minus tax. What is I in this case? Here, because they told is risk free, so you can say use the 11% risk free rate that you have used in for cost of equity in your CAPM. For cost of debt also you can use that 11%. So 11% into 1 minus 0.3, that means 11% into 0.7, which will give you 7.7%. You will always find your cost of debt less than cost of equity only, right? Now calculate the WACC. Now is the WACC. You know cost of equity, you know cost of debt, WACC. So WACC is, what is cost of equity? 18.55%. Sometimes you can round it up to whole decimal place also, it's up to you. Into, when you are using the debt equity ratio, which company's debt equity ratio are you using? Their company or your company? Once you reach to cost of equity, forget about their company. It's your equity, your debt ratio, equity to debt ratio. So your equity was 5 is to 2. 5 is to 2. But when you take the denominator, you have to write 7 because 5 plus 2. Your equity plus debt, right? So 5 over 7 plus, okay? This is how you find WACC. What is cost of debt? 7.7%. Here it will be 2 over 7, the balance. And when you get your WACC, it will be 15.45%. If you compare this, just check. This one is less than cost of equity, but more than your cost of debt. So now you can understand that by having a lower amount of debt, there is low cost. If you have that in your with your equity, it will bring down your WACC. Otherwise, imagine your cost of equity just 18.55%. But because of this debt of 7.7% is bringing down your WACC to 15.45%. Even though this is not the topic of this lecture, but we have covered this in the previous lecture, previous few lecture. Why should we have debt? Advantages of debt, it brings down WACC. We learned various theories also, right? M plus M theory, static theory. So to prove that, to explain that further, okay? So when you have to discount this project's cash flow, which discount rate should you use? 15.45%. This is the WACC you have to use. Okay, so that's it. Now let us go to explore adjusted present value. Adjusted present value, which stands for APV. Now, what is APV? We have net present value, then why adjusted present value? See, adjusted present value, briefly I'll tell you, it's a method that evaluates the project and the impact of finance separately. What does it mean? See, in net present value, we always assume when we calculate the WACC with the risk adjusted WACC, what happens? We include both cost and debt, right? Sorry, both equity and debt. But what if some project is entirely financed just by debt, or some project which is entirely financed by equity? So to show the impact of it separately, you separate the impact of equity and debt, the way you are financing a project, maybe entirely equity or entirely debt. So now you're showing it separately, the impact which is not there in net present value. Why? Because in net present value, when you are calculating that WACC, that discount factor, you are including the impact of both finance and debt there. which might not be the case all the time. So you show the impact of financing separately and the business risk separately. That's why adjusted present value. Okay, so two elements are there. One is base case net present value. That means where you expect that the project will be entirely financed by equity and financing impact, the gearing. You add both and then you get your adjusted present value. Now do you understand why I told in the beginning that you need your net present value, the support of it for your adjusted present value? Because without that, you cannot do adjusted present value. It will be incomplete. Okay, but there are little changes in the net present value also, because since you can see this 1, 2, 3. First is base case net present value, where value of all equity finance project. Then we have financing, present value of financing side effect. That is the second. And the third is value of a geared project. Why geared? Because you are taking the financing also with your base case net present value and it becomes a geared project, which is your adjusted present value. Now, let us go to the investment element. That is your base case net present value first. What does it compromise and what is it? It ignores the financial risk, right? It only ignores business risk. Second, what does it mean if it's only business risk? That means it will have asset beta only, no equity beta. Okay, so here how do you find? You first find the project asset beta. You usually be equity beta because we have to put it in our capital asset pricing model to find cost of equity. Now I'm telling you, revise that. Okay, unlearn what you have learned in net present value. This is only applicable when you're doing adjusted present value. If that is also there with your net present value. Otherwise, normal way, if it's just net present value, you go ahead. Normally what I have taught you in the beginning, right? Lecture 1. If adjusted present value question is there, you have to unlearn what you have learned. This is for what? For your calculation of cost, the discount factor only. Rest everything is same. Cash flow you'll be having inflow, outflow, investment, everything is same in net present value. The only change is in the discount factor. So find the project's asset beta. Number 2, now you have to write. Now what do you have to put in the capital asset pricing model? Cost of which one? Asset beta, not equity beta, asset beta. Because you are, base case means entirely equity based. No financial risk, so asset beta. Okay. And how do you find asset beta in this case is you have to use another formula. Remember I told you to find cost of equity, there are 3 things you can find cost of equity. One is CAPM formula, one is M plus M theory, and the other one is dividend valuation model. 3 methods. Dividend valuation model, no. CAPM, no. Then what is left? M plus M model. That model you have to use to find. Why? Because that gives you an ungeared cost of equity. There are 2 there. One is cost of equity, geared equity. The other one is cost of ungeared equity, which is also known as KEU, ungeared. That's why. So using that method, that formula, you can find cost of ungeared equity. You see, you have to know, we know all the formulas in the world, but the thing is you should know what is the right time to use which formula. Okay, so this is the right time to use that formula which I have been talking about, which I'll be using in the question to show you. Third is you get the base case net present value by using cost of equity only, and in that cost of equity only asset beta. Next is the financing impact. Okay, this is the second part. Here we have things like issue cost, which we are going to cover. Issue cost, when you go by equity finance, there are issue cost. Okay, when you go by debt also there are issue cost. Then we have tax relief on debt that we have to take here. These are financing cash flows. Okay, here we are taking issue cost for equity. This is a financing cash flow. To finance we are having that cost. It is not something to do with equity, I mean the equity element. Okay, then As all financing cash flows are low risk, they are discounted at either. Why low risk? It has debt, no? They're discounted at either two things. One is cost of debt or the risk-free rate. You can take in your exam also, remember, you might be given multiple risk-free, multiple rates. You should know which one you are using to discount. You have to write it in your assumption that this is the rate you are using. There is no harm if you use cost of debt. Some of you might use cost of debt, some of you might use risk-free rate. But in your assumption, it has to be written. What rate are you using if more than one rate is given? Now, before I proceed any further, let me do a small thing, a question on issue cost, because it's very important. This you should know about issue cost. Every question has this thing. So let us do a small illustration on issue cost. So whenever you are given adjusted present value in a question, it is not always that you get, but most of the time it's given, you will be given issue cost also there. Okay, there are so many things which are given. One of it is issue cost will be given. How do you deal with it? It is known as grossing up. You'll be given net figure for issue cost. You need to gross it up. Okay, so let's read the question. The finance required for a planned investment is 2 million. This is net of issue cost. Issue cost has been deducted and then you got this 2 million. And issue cost are 3%. As the finance raised will also have to cover the issue, and the finance raised will also have to cover the issue cost. What do? Remember, this 2 million which is there is after deducting this 3%. So that means the 2 million is 97% of the amount to be raised. The 2 million is 97% of the amount to be raised. That means let's keep this amount to be raised as X. So 97% of, okay, let's keep Y. Of Y is 2 million. That means something, some amount. This is the gross figure. 97% of that gross amount is 2 million. Why 97%? Because issue cost is 3%. You have to deduct it from 100%. If issue cost is 5%, it will be 95%. If it's 7%, 93%. That's how you work. Okay. So make Y the subject, the amount that you need to raise, 2 million, bring 97 the other side, becomes 2 million divided by 0.97. This is the formula that you should know. Whenever the amount is there, the amount divided by the percentage after deducting issue cost. If it's 5%, 95%. Like that. 2 million divided by 95. This is 97. So 2 million divided by 0.97. Don't put 2 divided by 0.97. If you're not able to deal with zeros or cut down zeros or don't know how many zeros to add, if you're not good in it, just write enter. When you're entering, write all the 6 zeros for 2 million. 2 0 0 0 0 0 0. There are 6 zeros after 2. Okay. 7 million is a 7-digit figure, by the way. So 2 and then 6 zeros. Divide by 0.97. Then you will get the whole amount. Excel will do this very easy for you. Okay. I mean, in Excel, if you just write 2 million divided by 0.97, it will not perform the function. The moment you write M in front of it, it will not deal it as 2 million. Maybe when you're writing it, okay, we understand is 2 million. But Excel will not understand. So in Excel, you have to write 2 million. Okay. Or in the calculator. So the amount will be, definitely it will be more than 2 million because you are grossing it up. So 2,061,856. If you want to be sure of your this answer, make sure apply 97% on this and check are you getting 2 million or not. You should be able to get it. Right? Backward calculation. Now, that's not enough. What do you have to find out? Issue cost. If you want to find the issue cost. Okay. Okay. This amount, you can easily get it. Just minus this from 2 million. That means 2,061,856 minus 2 million. That is your issue cost. Issue cost is what? 61,856. This will be your issue cost. Right? So in other other way, if you want to calculate this in one step rather than going like this, minusing this from this, there's another step. In one step only you can calculate the issue cost. How to do that? Just 2 million into 2 million. Okay, take 3 because 3% is the issue cost, divided by 97. When you're taking it, don't take 3% of 2 million. No, over 97 already you have deducted from 100. So 3 over 97 into 2 million. This is how you get the issue cost. You should be able to get the same amount. If imagine it was 5% issue cost, then it will be 5 over 95 into 2. That's how you do. Okay, practice this. Practice makes perfect, and this is exactly the same thing, same way you are going to get. There's no difference, and this is very easy. It's very small step, one step only, but you should know that one step to get the marks. So now let's proceed ahead with our adjusted present value. We are still in the financing impact, the second stage. Okay, now we are going to go to the next, from issue cost to tax relief. Okay, you have to find the present value of the tax relief on interest payment. Because it's a debt, you have to pay interest, and since you are paying interest in different annual installments, you have to find the present value. What is the value today of it? Or another word is known as present value of tax shield. Why tax shield? Because tax is like a shield for you, right? Protecting you. There are two scenarios which we are going to go through. First one is known as simple scenario, where for bond, okay, you have to pay interest at a fixed amount each year. Okay, how to do this? The method is, first you find the total amount, the total loan. This will be given to you, everything is given, just find the figure, amount of loan into your interest rate into the tax rate to find the annual tax relief. Because on the interest that you're going to pay on the loan, you're going to get tax relief. Okay, next you are going to pay this for n number of years, 4 years, 5 years, 3 years. So you have to find the annuity factor. Table is there, formula sheet. When I do a question in Excel, I'm going to show you how to use the discount factor table, annuity factor table. So for n years you have to use. Okay, this is for interest, tax relief on your interest. Okay, for that you have to use annuity factor because interest every year you are paying. So annuity factor for n year. Then you need year one discount factor. Why year one discount factor? Only if tax is delayed 1 year. Sometimes tax is delayed 1 year, no? So you need year one discount factor. For that. If you're not understanding this, why year one discount factor? Do not worry. Through questions you will understand. Okay? Whatever you are not understanding in discussion, in the theory, in the lecture, in the questions we'll solve it. After that you will have no doubt. Then whatever you get, it is the present value of the tax shield. Okay? Present value of the tax shield. That's what you want for your answer. Next, we have a complex scenario. The same thing. This is for bank loan. Repayments are for equal amounts. Okay, repayment are for equal amount. You don't know the amount yet. You have to find out the amount this time. But it's equal. So there is step one. You find the amount of the repayment. How do you do that? Whatever the amount of the loan is given to you, and you know the annuity factor because 3 year, 4 year as a all. So divide the amount of the loan with the annuity factor. Okay, that will give you the annual amount. That means every year how much, what is the annual amount. Step 2 is get the annual interest charge. Now we are going to do a question on the complex scenario. Okay, okay, here you have 400,000, okay, of loan that you have borrowed for 3 years, which are repaid in equal installment. Risk-free rate is 10%. Debt is assumed to be risk-free. Calculate the present value of the tax relief on the debt interest. If the corporation tax is 30%, assume the tax is delayed 1 year. Okay. What is your step 1? You need to find the annual amount. Okay, annual repayment amount. That is the amount of the loan, which is 400,000 divided by annuity factor for 3 years at 10%. Annuity factor 10%, 3 years. So when you go to the annuity factor table, if you have it with you, go that under that 3 years, 10%. The annuity factor you will get is 2.487, which will give you the amount of 160,836. Now, for this, you need to do a table. You don't have to do a table because Excel will do it for you. But in the Excel, you need to do this. Okay, here. How many years are there? 1, 2, 3. Okay. Then the opening balance, OB. Okay, in dollar, in dollar. Then we have the interest on that at 10%. Okay, I will make columns for you. This is easier. Then we have the repayment. Then we have the closing balance, CB. All these are in dollars, okay? Now, there is a good thing in this question. You can check whether you're right or not with your this thing. How? How? This has to be 0. At the end, third year, everything has to be paid off, no? That's why you're doing annual installments. At the end, it has to be 0. No loan. You have paid off the loan completely. This is how you know you're right or wrong. But remember, there will be some small figure which is left there. It is due to rounding because you'll be rounding up the figure. For that, small number will be there, but we'll take it as 0 only. Okay, it does not matter. You can tell rounding difference or due to rounding. You can write, mention it. We'll see this how. So first, we have to start with 400,000. This is the opening balance. Okay, remember, when you are doing this, you cannot do like this. You have to do it like this. Horizontally, it needs to be done. You cannot do it downwards. Because this closing balance that you are going to put here becomes the opening balance in year 2. You understanding? You need the closing balance of year 1 for the opening balance of year 2. So you cannot write an opening balance for year 2. Okay, so interest on 400,000, that is 10%, that's 40,000. What is the repayment amount? 160, 836. Every year, 160, 836. 160, 836. The other columns you cannot fill. So this will be 279,164. This, write it here again, 279,164. You see, this closing becomes this opening. On this, if you apply 10%, it will be 27,916. Okay. So now what? Just give me a minute. Okay. When you do this, remember interest has to be added with the opening balance and repayment minus. Okay. I think you guys know it, but if you don't know it, I'm mentioning you here. Interest you add, repayment you minus from opening. That's how you get the closing balance. This will be 146,244. This will become an opening balance for third year. On this 10%, 14,624, and you will get 32 here. But this 32 is due to rounding differences. There are so many rounding figures. I told you, small amount you will get. Just ignore it. Now, what do you have to do? Is it okay? No, you have to find tax relief on the interest. Okay? You need to find the tax relief on the interest amount. And tax is delayed 1 year. That means year 1 you'll be paying, year 2, year 3 you'll be paying like that. Again, make a table for this. To find tax relief on the interest. I will just extend it here. Year 1, 2, 3. Interest cost. Interest. Okay, interest. Tax relief. Timing of tax. What is the discount factor? What is the discount factor now? This risk-free rate, 10%. Okay? All debt is assumed to be risk-free. So for debt also you can use 10%, right? Because they told all debt is assumed to be risk-free. Otherwise they would have given you different cost of debt. I told you, for debt you can use cost of debt or risk-free rate, anything. So discount factor will be 10%. And finally, the present value. Why? Because you are finding the present value of the tax shield. The tax relief first you have to find out. On that you have to find the present value. So before tax also you need interest. You already have the table. From there, take out the interest now. And why did we needed the repayment? Because if you do not get the repayment, okay, first year still okay, 40,000 interest you will get. But what about the other 2 years? To get the interest, you need to deduct repayment, no, every year, because closing becomes opening, so every year is carried forward. That's why you need this repayment table. This table first needs to be calculated. Then you need the second table. There are two tables that you need to get tax relief. Now you get the interest. Okay, now find the tax relief, because it's not just 10% of the amount of the loan, which is 400, which is 40,000, and every year the interest is 40,000. It's not like that. From that amount of loan you are repaying also, so that repayment is deducted and then you get the interest every year. That's why interest differs every year, if you see. So first year is 40,000, second year it is 27,916. When you are taking interest, it is this one, okay, this column, not the repayment. Don't go and take repayment from there. 14,624. Tax on 30% of it is 12,000. This is easier, okay. Here you don't need to rely on this thing. 8,375 4,387. Timing of tax 2, 3, 4. Year 2, year 3, year 4. That means 1 year will be paid in year 2, 2 will be paid in 3, 3 will be paid in 4, because 1 year tax delay they told, and 10% discount factor. Will that matter? It will. It will. When you're taking year 1, 10% discount. Remember, if you take 1 divided by 1 to the power 1, that's how we normally take for year 1, you will be wrong, because year 1 tax is paid in year 2. So you have to take year 2's discount factor now. That means it will be 1 over 1 to the power 3. Then for the third year it will be this, then this. Okay. Even though it's year 1, you'll be using the second year's discount factor, 826. You can check for yourself. Because if you do this for the first year, it will be 0.909. This is for the first year. Then this is second, third, fourth. But you are bringing it 1 year behind. Because year 1 you are bringing in year 2. But for discount factor you have to use year 2, but in year 1. You understanding? Maybe through questions you will understand it better, but it's little confusing. But it depends on when you are paying the tax, which year. If you are paying year 2, then you have to use year 2's discount factor in year 1. Okay. That's why you are starting with 0.826 if you see for year 1, not 0.909. This is the reason, because 1 year tax delay is there. So when you find the discount factor, do you know how to find the present value? This tax relief, 12,000, multiply with the discount factor. That's it. It will be 9. 912. You can use Excel to multiply. You just multiply in one cell and copy and drag to the other cell. This saves a lot of time. But make sure your first cell that you are inputting everything whenever you do it in Excel. This is a very good thing. Check. You only need to check in the first line or first column or first row if things are correct or not. Once you have input the function correctly, copy and drag to the other cell. You don't have to do it in every other cell if it's the same formula that is being applied in every column or row. Okay, you need to be smart enough. Even though it has AFM has lots of calculation, earlier it was very difficult during our time. I was the last batch to do it in a paper system. Once the calculation goes wrong, it's very difficult. But now, because of technology, things are easier. So make sure that you take advantage. This is the present value. 19,134 is the present value of tax relief. That's what you need for your adjusted present value calculation. That's what you need. But to arrive to this figure, how many tables and how many figures you had to go through? So now you can have an estimate of the length of calculations and the amount of time that you need to input to get even the smallest figure, adjusted present value. This is just one question. Imagine AFM has 3 questions. One is for 50 marks, the other two is 25 marks question. Okay, practice the time management from day one. Don't wait till your exam or before the 1 week before exam. It's not going to do any wonder. AFM is a very time consuming paper. It will consume your time like hell because lots of calculations are there. Discussion, but anyhow you will handle it. I know it, but calculation you will not be able to. You will panic. Trust me, because there are so many things to read and so many numbers are there. You don't know what to use, how to use, where to use. Even though you have learned it everything, you are very familiar with it. You learned all the formula. Trust me, only through practice you can pass AFM. There is no other way. No shortcut to this. Okay, so let's go through calculation of APM. Okay, this is how you calculate APM. Okay, so the starting point should be your base case net present value. That means you have to start with net present value. Okay, then you add the benefit and deduct the cost of financing, and then you get your adjusted present value. This is how you get base case net present value minus your present value of issue cost plus your present value of tax shield. Tax shield is an advantage, it's a benefit. So you add issue cost is a cost you deduct. Okay, and the present value should be present value for issue cost as well as tax shield because they are cost of financing. So for financing you have to find the present value. Okay, and then what you get is known as adjusted present value. Now this is not it. We have additional things to add and deduct in this before we reach the adjusted present value. Okay, but before that let us do test understanding 2. Test understanding 2, this is a detailed question, and also the calculations will be a bit longer here. Now because time is limited in your AFM exam and you have lot to read, how do you save time? How do you read fast? That is also a technique that you should apply, by the way, because since I'm a fast reader, I anyway read lots of books, but that's one advantage that I have over other people. Some of my you can say colleagues and all, that I can read fast. So because of that, I often save a lot of time. I don't take too much of time to read and this thing. So, but I want you people also to have the same thing. Maybe most of you are not fast reader. You cannot. You take time to read. It's perfectly fine. But there are some techniques that you can apply through which you just read what is very relevant for it, very relevant for you. For example, this question: calculate the adjusted present value. The moment you see the word calculate and you know it is adjusted present value, just visualize what is the format. You first need to calculate net present value, correct? Then the financing effect. So you visualize what comes in net present value: all the sales, the cost, the tax, tax allowable depreciation, working capital, investment. You need to find a WACC. So now you know that with that understanding, you only need to read the numbers. You just have to get the numbers out. That's it. You don't need to know what they are into, or all the history and the background and all those things. That is relevant when you're writing discussion questions. Okay. So for example, under investment detail, you know this is relevant for your this thing, and this is your financing detail. That will come later, but first we can just finish off with this. Okay, you have been given the equity beta 1.27, then you have been given debt to 25. So you read like this rather than reading rounding company is a company currently engaged in manufacturing of baby. It will take a lot of time, trust me. And this will not come in day one. For you to reach that stage where you can only pick up the relevant things, you need to read a lot. I mean, lots of questions you must have already done. Maybe in the middle of your this thing, then only you will know why. Why is it required? Because by then you know the format. It is already there in your subconscious mind. So when you're reading also, you know what you're reading. I mean, where to read from, rather than reading from end to last. You understanding what I'm saying? Rather than reading from end to last, okay, and thinking and reading, you do not have to think. When you practice so much, you know, I need equity beta, I need the debt equity ratio, I need my tax, I need my risk free rate, I need my cost of debt. You know these things, you know what you need. Only look for those things. If those things are there, with that you can do the calculation. Okay, so I need my equity beta. Now first thing is, when you are given a question like this, start with WACC, calculation of WACC. Okay, so for calculation of WACC, equity beta is given, debt equity ratio is given. What else is there? Again, equity beta of your company is there, then debt equity ratio 37. This is there, right? You have to look for your company and the similar company is this thing. Debt is risk free rate is 10%, market profit 16%. This is the return. This is how you read. This is how I read. I mean, I don't read loudly, but in my mind I know I look for those things only. This is how I read. I cut down the things in between and I read. But it didn't happen with me in initial stages, not day one. 30-40 questions already I have read. By that time only I have reached the stage where I don't need to read everything. I know. It's there in my subconscious mind. I know what is going to be following, what is going to be after that, what is before that, what could be written. Okay, I could kind of assume. Okay, but for you, if you are this is the first time, it's not a safe strategy to do that. You cannot do that. You don't know what is relevant, what is not relevant at this stage. But I'm telling you, when you go ahead doing lots of questions, this is the technique you apply. Okay, these are the things you need. Then you will know in each paragraph what is there. That's the thing. Okay, so then we know that new machinery cost is 800,000, which is net of issue cost. Cash inflow is 400,000 for 3 years. No scrap value. Corporation tax is 33%. Tax allowable depreciation is 25%, reducing balance with a balancing allowance at the end when the machine is scrapped. Okay, these things you can read later. Okay, but issue cost you can read. For the issue cost and all will not come down. Okay, now WACC, calculation of WACC you need. Okay, other thing you need two calculations. One is WACC, one is tax allowable depreciation. Other things you can do. You just need to fill it in the columns. That's it. Okay, so first find WACC. Where do you start with? 1.19. This is the proxy company. Know what is your company? Your company's information they usually give it in the beginning. This I know through experience. Okay, and then they will give the proxy company, which is 1.19. So use it. Okay, I will go down. Just okay. So 1.19. Okay, now tell me. I'm using the formula. I'm not writing the formula down. Okay, debt equity ratio. Whose debt equity ratio you're using? Proxy companies. 30-70. 30 is debt. Equity is 70. Okay, debt to equity ratio. Sometimes they give equity to debt, sometimes they give debt to equity. Make sure you know it. Okay, 30/70 or 70/30. It's very important. I mean, obviously, imagine if you're having debt 70 and equity 30. It's a very risky company. They will not give it like that. Okay, it's the other way around. So it is 70/30. So 70 over 70 plus 30 into 1 minus tax is 33%, not 33, not 30%. Okay, do the calculation and asset will be equal to 0.92. This is the asset beta. Now, with this, do you need to find equity beta if I ask you this question? No, not in this case. If it was normal net present value, yes, go ahead and do it. In this case, don't. Why? Because this is adjusted present value question and you need base case net present value. For that, it has to be entirely equity. Entirely equity means asset beta. Asset beta measures only business risk. That is the meaning of entirely equity. So this 0.92 only, put it in your CAPM formula. What is it? The risk-free rate is 10% plus 0.92. What is the market return? It is 16% minus risk-free rate 10%, and you will get what? 15.52. But you can round it up to whole number. Better to round it up to whole number, 16%. Okay. Now, second working is what? That you need tax allowable depreciation. We'll finish the working first and then I will show you the table. Because my focus is on the working. For that, it's a reducing balance. So WDA, written down allowance, tax relief, okay. So in the first year, it will be what? What is the cost? Initial cost you have to look for. It is 800. Okay, 800,000. Okay, it's 800,000. This one. When you have to look for this one, new machinery, 800,000. But you can drop down the 3 zeros and deal. Okay, 800. Or you can write 800,000 also, does not matter. Year 1 tax allowable depreciation, you can write TAD. Will be how much? And tax relief will be at 33%. Okay. Okay, just let me look at the tax allowable depreciation rate. I kind of forgot. It's okay. You can always refer this thing. You will not remember everything. You will forget. It is 25%. Okay. So 25% of 800 is 200,000, which will be 600. Okay, and on this 200, on the tax allowable depreciation, you have to take tax. Okay, which is 33% of 200 will be 66. Next, again, year 2 tax allowable depreciation, 25% on 600 will be 150. On this 150, you need to find out 33%, which will be 50. And then year 3, they told after scrap off. Scrap off means you're selling it. Okay. There'll be no proceed. I mean, you're not scraping if it. They didn't give you any amount, how much you are selling it for. Otherwise, they would have given you the sale proceed. So if they have not given you the sale proceed, it's 0 and it's 450. And this 450 is known as balancing allowance. Remember, if it's a positive figure, it's a balancing allowance. Otherwise, it's a balancing charge. It's a negative figure. That means sale proceed is more than the closing balance. And on this 450, you have to 33%, 149. Now what else? What do you need? Nothing. You got your WACC, you got your TAD, go to the table, fill it. Start with the receipt. or a cash inflow, anything. There are 3 years, okay, but you need year 0 also because for initial investment. So 0, 1, 2, and 3. What is the amount? It's 450 from year 1. 450, 450, 450. Tax at 33%. Okay. See, tax at 33%, we are not taking tax allowable depreciation for time being. Tax on 33% means on this 450 tax. On that receipt, you are taking tax. Okay. Because you only have one inflow. You don't have any other cost to deduct. Just this one inflow on that tax. That's it. No other cost is there. Usually when they give you adjusted present value, the net present value section, they will make it very small. That table is not very big. I mean, not like how normally you calculate net present value, but you're having so much of things to put: working capital, investment, then fixed costs, variable costs, multiple. No, they don't give. They make it very small. So it's 149. Same year tax 149 because on 450, 149. After that, tax relief. Tax relief on this one. Already working, you have did 66, 50, and 149. It's addition. Okay. Then in investment, 800,000, which is deduction in year 0. You see, you're working wherever you have to put this table, always start with the working first because it will take more time. Once that is correct, putting it in this table is nothing. It will just take 1 or 2 minutes entering figure. Okay. Next is cash flow. Net cash flow. So 800 negative, 367 positive, 351 and 450. Then we have discount factor, which is at what percent? 16%. You have already calculated it. So 1, 0.862. You can use the table and get the figure here. Make sure that you write the discount factor figures there rather than directly multiplying it with the net cash flow, so that if things go wrong, you can check. It will be up to 3 decimal places only. Next, multiply the discount factor with net cash flow and get the amount, which is present value, which is 800, 316, 260. Make your number to whole number, okay, rather than putting so many decimal. After decimal, don't put so many digits. It looks very, even for your eyes also, it should look something which is very easy to understand, very easy to grasp, rather than writing 316.58432, right? Then your base case net present value is 65,000. Remember, this is 800,000. Okay. When you're doing the final calculation, write the whole number. If you're not good in adding zeros and deleting, how many zeros to add and delete. Now, that's not over. We have financing impact. Here is the majority of the work. When adjusted present value question is given, remember, majority of your work is in the financing part, because this is the tricky area. Examiners know that net present value table, you can easily put it. There's nothing new. Okay, you can start with anything here. So what is it? But you have to know what portion is equity, what portion is debt. First divide it in the financing, equity and debt. Okay, don't get confused with this equity and debt with this base case net present value. This is and that is different. Okay, now we'll read the financing part. So they have used bond and right issue of equity. 40% is debt, 60% is equity. This is redeemable in 3 years time. That means redeemable debt. Issue cost is 4%, 2% on debt. This issue cost on debt we didn't cover in my lecture. I didn't cover it in my lecture, but through this question you can cover it. Okay, not everything is covered in the lecture. Some things, new things also you will learn through questions. Okay, so that's the thing. Now, debt cost are tax deductible. Okay, that is anyway we know that, right? Even if they don't write it in the assumption. So let's start with divide the equity and the debt first. Of how much? What is the amount you have to take from the initial investment? 800,000. Okay. From 800,000, 60% is equity, 40% is debt. That means 480,000 is equity, 320,000 is debt. And issue cost will be 4% and 2% for debt. Now we are going to work on three things. What is it? I will label it as A, that is present value of issue cost on equity. When you are working in the financing section, remember everything is about present value. Everything. Okay. So now, what is it? Grossing up. Don't forget the grossing up. I have started it with this. So now you know the equity is 480, not on 800,000, 480,000 into what is the issue cost? 4%. So 4 over 100? No. 100 minus 4, 96, which is 20,000. Okay. Some numbers are easy, like in this case. Put it in brackets so that you know you have to deduct it. It's a cost. This is the equity cost. Okay. Now, what else? Second, present value of issue cost on debt. I have not covered this in lecture, but let's see how to do it. Cost, it is 320 is the debt. Same way, it's 2%, so 2 over 98, which is 6531. Remember, that's not the end. You are getting tax relief on the debt. Unlike equity no tax relief, but debt, yes, at 33%. So 33 of 6531 is 2155, which will bring down your cost even down. Deduct it. 4376. Now, present value of the tax shield, or on the interest, you can say. What is it? What is the total amount of the loan that you have raised? One is 320, we know, that is the debt. Add this 6531. Don't forget to add the issue cost. You should always add the issue cost with the debt. 6531, which will be equal to, here you have to find out, okay? Little bit, you have to have a little bit of common sense. Debt is not given, the amount, but you have to find the debt indirectly like this. First you have to find the amount of the loan, then you have to find the amount of the interest, then only you will get the tax shell. 326 531. Now annual tax relief. What is annual tax relief? 326 531 is the amount of the loan. What will be the percentage of debt? I mean the cost of debt, 10%. For the interest, 10% is for the interest, okay? And tax is 33%. So it will be 10,776. That's not enough. You need to multiply this with the annuity factor. Annuity factor for what? 10% for 3 years, which will be 2.487. Multiply, because every year you are getting it, no? 26,800. This is the present value of tax shield. So now what? The last stage, APV calculation. How do you do it? You have to label it, okay? Don't just write numbers. You have to label it as base case net present value. How much? 65,000. Okay? From this table, this 65,000, you have to carry forward every number. Now a student might ask me, what, ma'am, what will happen if I get my base case net present value incorrect? So in that case, do not panic and do not think you're going to fail AFM. That's not how it works. You have the table, you have your sales, you have the workings for working capital, tax allowable depreciation, you have the working for WACC. You are going to get maximum amount of marks from there. Even if your net present value is wrong, you will only lose your 1 mark, and that mark will only be lost once, not twice. The moment you carry forward in your adjusted present value, marks will not be cut. Marks will be cut the first time you have made it wrong. So 2 times they will not cut your marks for the same mistake. Do not worry about it. Just carry forward. You need to carry forward and don't get stuck with something and don't try to perfect. Sometimes what happens at the end, you came to realize it's wrong. Do not try to correct. You might not have the time. Just go ahead with that figure and go ahead. Okay, it's not that you're going to fail AFM or something is going to happen. No. I myself have passed AFM like that. I know I got a net present value. Most of my things were incorrect. I mean the final answer, but I know I'm going to pass anyhow because I have my workings there. And I didn't go and try to correct it because I didn't have the time. I ran short of time. If I spend a little more time in that, I would have not been able to do my risk management and reconstruction question in question number 2 and 3. And that made me pass AFM, and also I'm a high achiever for AFM from my country. So a life example is there for you. So it's not you who have made the mistake. Oh, so do not feel bad for your mistakes. It's not only you. People do make mistakes. Everyone make those mistakes. It's not only you who make that mistake. Okay. Anyway, less present value of issue cost. Whether it's debt or equity, issue costs are deducted. 20,000 for equity. For debt, 4,376. This is why working is required. You just need to carry forward the working. And plus present value of tax shield, 26,800. And you will be get 67,424. This is your adjusted present value. This is not enough. Last final step is there. One more thing and you will get that 1 mark. If you do not, you are going to lose 1 mark. What is that? Right. Need to write what? This project is financially viable. Therefore, you need to go ahead with this project because look at the adjusted present value. It is giving you a positive adjusted present value. You see, it has increased. Your net present value was just 65,000. APV is 67, is more than your net present value. So you know this project is financially viable. You have to go ahead with this project. Now we are going to add with this thing, with this adjusted present value, we are going to add additional things and then do a final question on adjusted present value with all the other additional stuff. So this are the additional factor. We have subsidized, or which is known as cheap loans. Loans which are at a lower interest rate than the market rate. Because sometimes we might finance using the subsidized loan. Okay, how do you account for it? So this is how you need to find out. You need to find the present value of the cheap loan because they have lower interest rate, right? And this also, that means you are saving interest, because now you have to pay less interest because the interest rate is less. Second, but because your interest is less, you are going to lose out the tax relief, right? Your tax relief will be lost. So you have to deduct that from your interest saved. On the other hand, you are earning, it's a benefit because you're saving the interest. On the other hand, you're losing because tax relief is lost, right? You need to find the present value of both and deduct. And the final amount, it is the present value of the cheap loan. That's what we need for our APV calculation. Then after we include that, okay, the amended calculation for APV will look something like this. Base case remains the same. It could be positive or negative. Then you deduct issue cost, present value of issue cost for both equity and debt, present value of tax shield. One is for normal loan, one is for cheap loan. Okay. And then the present value of the loan itself. One is the tax, one is the loan itself, the interest we are talking about. Please understand that these are two different things. Present value of the cheap loan. How much interest you have saved, that you will be adding. And then tax relief that you have lost because of the cheap loan. And then the final is known as adjusted present value. Now we are going to do test your understanding too with this with this subsidized loan. I've just realized that test your understanding 2 I've already done. Okay, so our last is test your understanding 3. But before that, there we have one more additional thing to add. So before that, we are going to do the small question with the cheap loan. Okay, so here company A requires 1 million debt finance for 5 years. It has borrowed 700,000 in the form of 10% bond, which is redeemable in 5 years, and remainder is the subsidized loan at 6%. So the normal rate, if you see, is 10%, whereas subsidized is 6%, you see, and tax rate is 30%. Assume that tax is delayed 1 year. Whenever tax is delayed or not, assumptions will be given to you in the question. If it's not given anything, that means the tax will be paid in the same year. Okay, since here they told it's going to be delayed 1 year, then you have to pay after 1 year. Now calculate the present value of the tax shield and the present value of the cheap loan. Okay, just because this is only one question, only testing your understanding of the cheap loan, you only have one thing, but in the actual exam you will be having multiple things to work on in an adjusted present value question, so you have to be ready for it. You'll be having issue cost for both equity debt. Mostly it's equity which is given, debt is not given like that issue cost for the exam, but it could be given, you have to be ready for it. And tax shield. Okay, and one more is there which we are going to go after this question, we are going to go through that, that is a debt capacity. Okay, now we'll make two columns, one is for normal loan and one is for the cheap loan, so that you don't get confused between the two loans. There are two loans here, two debt finance. So let's start. Normal loan, you can write subsidize or anything, it's fine. We are more worried about the calculation than the terms. So how do you start? At least for the normal loan, do the same thing for the cheap loan, just change the rate. Okay, so you have to find and this is, what are you finding? Present value of the tax shield and the present value of, this is number 1, this is number 2 requirement. We are doing number 1, present value of tax shield. So we have to work with the tax. Okay, so that means annual tax relief. How much? Normally you have borrowed 700,000. Multiply here itself only I'm showing you the working. It is 10%. Okay, and what is the tax rate? 30%. What is the amount? It will be 21,000. Don't write 21,000 because I've written it. You have to check yourself whether it's 21,000 or not. Okay, do your calculation. Do the calculation while I'm doing it. This is the fastest way for you to learn rather than just watching the video. Don't do passive learning, do active learning. Okay. Next, how much you have taken for subsidized loan? See, you require 1 million. Out of 1,700,000 you have borrowed. That is normal loan. That means the balance 300,000 is the cheap loan. Into here it is 6% and tax is same 30%. The only change is here and this amount, which is 5,400. Next, this is tax relief. Okay, what about annuity factor? You have to take care of annuity factor because you are getting that tax relief on the interest you are paying every 4 years, every 5 years, but it's delayed 1 year. Okay, so you have to work with the annuity factor AF for 5 years at 10%. Annuity factor at 10% or 6%. Here you can assume, okay, assumption could be there. You can use 6 year or you can use 10% for the cheap loan, but for the normal loan use 10%. Okay, so in your textbook, okay, what they have written, the assumption is for both the normal loan and the cheap loan, annuity factor they are using is 10%. Why? Because even if the rate is less, it's a subsidized loan, that's why the interest is less. Okay, but they are saying the risk is same as the normal loan. That's why, because the risk is same, they are using the discounted 10% for both the loans to reflect the risk. Okay, so here also, okay, what is the annuity factor? 3.791. You have to go to the table of annuity factor, check for 5 year 10%, and you have to get this figure. Get it on your own. Then this will be fun for you to do for both. Okay, I told you the reason why 10% for both. Next, remember this is delayed 1 year. So you have to bring everything to year one. I mean the second year. For the first year you are going to pay in the second year. Okay, so that second year you have to discount it back to year one. So you need a discount factor. Because everything you have to bring it to year one only, right? You have to discount all for 1 year. Again at 10% only. 0.909 same. Present value of tax shield. What are you supposed to, how are you going to get it? Just simply multiply 21,000, multiply with this, multiply with 0.909, and you will get 72,366. Here you will get 18,609. This is not over, this is just a tax shield present value. What about the cheap loan? Because of the cheap you have to pay now less interest. You have to work that also. Okay, present value of the cheap loan. But before that, let me show you a table. This will make your work easier. I am adding one more year because tax is delayed 1 year, starting with 0, 1, 2, 3, 4. So here, annuity. Present value of interest saved and deferred annuity. That means it's deferred, right? Present value of tax relief lost. So on the other hand, you are saving interest, on the other hand, you are losing the tax. After deducting that, you will get. So you are saving interest how many years? Normally, when you are saving interest, you are not delaying it by 1 year. It is only for the tax relief. So year one, normal way. Year two, year three, year four, year five. All this 5 year you are saving interest because of the low cheap loan. But when it comes to tax relief that you are going to lose, it's after 1 year. That means starting from year 2. You see? You understanding what's happening? Now, this is what I wanted to ask. So when you bring down, okay, discount, everything needs to be discounted in year 1. That means this has to be brought down here, this has to be brought down here, this has to be brought down here, this has to come back here, this has to come back here. That's why 0.909 discount factor, which is at 10%. Everything you need to break down to find the present value. Okay, that's the reason. Now, let us go to the actual calculation. Interest saved, tax relief lost. So the annual amount. Okay, what is the annual amount? This is the cheap loan. Don't forget, don't worry about the 700,000, only 300,000. So 300,000 amount of interest that you're saving. Earlier you were paying 10%, now you have to pay 6%. That means 4% only you are paying. 4% less you are paying. Interest saved. 10% minus 6%, the difference. Okay, just multiply. And that needs to be multiplied further. By 30 for the tax relief lost for the tax, okay? But if it's interest, then 300,000 multiplied by 4%, which will give you 12,000. And if you want to find the interest also, multiply 12,000 by what? The tax, that is 30%, which is 3,600. Okay. For interest, do not multiply by 30%, only for the tax relief lost. Next, annuity factor. When it comes to interest, don't forget annuity factor for 5 years. It is the same as before, 3.791, 3.791. For interest also, because interest also 5 years. Even the 1 year delayed, 2, 3, 4, 5, 6. So interest also, tax also 5 year you are going to relieve loss. Next, present value factor, discount factor. Which year? For interest save, you do not have to find the discount factor, you do not have to bring it down to year 1. But for tax relief, you have to, because it's 1 year delayed. Interest, no problem, okay? The year it is paid, just multiply by the annuity factor. 1, 2, 3, 4, 5, that's it. But for tax, multiply by the discount factor because of that 1 year delay. If it was not 1 year delay, then you don't have to take the discount factor on this thing. Present value of cheap loan. So just multiply the annuity factor by the amount. 45,492, 12,406. Okay, this will be the amount. You need to do more questions on this until it's there. You are like a pro. You know, okay, this is the amount you need to find. This is how you have to find the tax relief. Do multiple questions. Now we are going to go to the one last factor that is to be included in adjusted present value calculation. So this is the one last factor, that is debt capacity. Okay, when this is given, okay, see, when you are calculating the present value of the tax shield, it is based on the project's debt capacity and not on the actual amount of the debt used. You have to know this. For example, let's say the actual debt that has been raised is 800,000. Okay, but the investment is believed to add 1 million to the company's debt capacity. So when you're taking the tax shield, it should be on that 1 million debt capacity, not on 800,000 that you have actually raised. Okay, now Let's do test your understanding 3, a final question on this lecture that includes everything in a whole APV calculation. And this question we are going to do it in Excel. Before I do this question on Excel, test your understanding 3, let me go through the information first. Because in Excel, this question is not there, okay? And so I will just be going through the information. And in Excel, what we are going to do, we just need to input the number in the cells to do the calculation. Make sure that you have this question with you while we are doing this question on the Excel, because I will not be having this question with me. I will just be taking the numbers out, okay? So as I told you, how to read this information, you have already done test understanding 1 and 2. 2 is similar to this, but 3 is additional. It has debt capacity, it has subsidized loan, it has issue cost of debt and equity, it has everything, okay? So a molding machine cost 450,000. Wherever the numbers are, just read before it, you will know what the numbers are for, okay? Then operating cash flow is 220,000 for each of the 3 years. That means 220, 220, 220. Okay, scrap value will be 0. Okay, debt finance is 40% and it has 2 different sources. Government has offered to lend 90,000 with no issue cost and subsidized interest at 3%. The full 90,000 will be repayable after 3 years. It's a redeemable debt. Now, the rest of the debt would be provided by the bank at the normal interest rate. Okay. See, here the debt is not given. They just told the rest of the loan. To find the rest of the loan, you have to find the 40% of the initial cost. Okay. Initial cost is 450,000. Out of that, 40% is the amount of the total debt. Out of that total debt, 90,000 is at subsidized. So the balance will be at the normal rate, right? And the bank loan would be repaid in 3 equal annual installments. And the balance of the finance we know is equity. Okay, so issue cost 5% will be on equity and 2% for the bank loan. That means issue cost on debt. And debt issue costs are allowable for corporation tax. We know that. Now for the WACC, for the discount factor, because you need a discount factor for your net present value, base case net present value, right? That's why they have given this equity beta, debt equity ratio and all. So equity beta is 1.368, debt to equity is 1:5. That means debt is 1, equity is 5. Okay, and their current equity beta is 1.8. 20% is represented by debt. That means 80% will be equity. Risk-free rate is 10%, and market portfolio, the average return is 15%. That is for your CAPM formula. Okay, so now what else? Tax. Corporation tax is 30%. Okay, and it will be payable in the same year, thank God. Machine will attract 70% tax allowable depreciation. Balance to be written off evenly over the remainder of the asset life. And allowable against tax. Okay, we know that. That means it's like a straight line. 70% initially, after that it will be equal for the other 2 years. The firm is certain that it will earn sufficient profit against which to offset this allowances. So now you have to calculate your adjusted present value and determine whether the project is worthwhile or not. Even in your actual exam, this is how a question will come. This is like an actual exam, only you take the scenario. Now I'm going to Excel. Okay, you have to open your ACCA website. From there you have to log in and let's do. And while I am there, you also make sure that you are also using the Excel and typing by yourself and doing it with me. Okay, so let's start. So welcome to your ACCA practice platform on your ACCA website. So when you go here, you'll be getting this page. Okay, and what you need to do, you need to go on your right hand side, you need to click AFM, and then you have ACCA official resources and the other one is the blank workspace. Since our question, we are not doing a past paper question, we are just doing it from test to understanding, you can always use a blank workspace, and this is for any subject. So you click here on the blank workspace, and you need to, since I've assigned it already, okay, it will come like this. You need to assign. Once you assigned, it will come here on your left hand side, blank workspace. Click there and you can resume if you have already done things before. Okay, so here you see there is nothing because this is blank, exhibit 2 3, but this is how your AFM will look like. If you see, you will be given exhibit 1, information will be here. You can scroll like this. First I will tell you the tools that you need to use before I actually do the question. Okay, then you will be having exhibit 2, you need to click, and exhibit 3. Okay, so mostly the 3 exhibits might be for 3 different questions, and then you have requirement 1. Okay, you see, for x number of marks, x number of marks, A and B. This is here you are going to read all your requirements, and this are all your information, the case study, exhibit 1 2 3. And here you have your response option. Either you are going to choose word processor, you see, this is for typing, and anything that you type here will be saved, auto saved, even if you don't save it. And spreadsheet, you see, this is how the spreadsheet will look like. But before that, let me tell you some things, tools. And this page is automatically, it gives you background information. Okay, but the details you will get it from here only on left hand side. Now here you need to click here on symbol. If you see, there are 5 symbols, and only 5 symbols only will be used. They will not give you any symbol which is out of this 5. So we have dollar, we have euro, we have pounds, we have yen and peso. Okay, if you click here any of this and insert, it will come. I will show you one. Word processor. Here I want to insert a symbol, let's say yen, insert. You see, yen appeared. So that's how, but keep it in it's automatically, it will be in dollar sign only, and mostly it will be in dollar sign everything. The only time you have to work it in different symbol is when you're doing exchange rate risk management question. Here you see yellow color box, see here you can highlight or you can remove highlight. Now I will show you how to highlight. Let's see, yellow highlight, you want to highlight this, you see, just drag it and you can click it and it will take the, it will highlight it. But remember, this is the practice session. Your actual exam, some minute differences will be there. For that also we have this thing, um, it's there, it's written in your front few pages. Once you start this, the actual paper, if you do, I mean do any past paper question on a CV platform, first few pages they will give you that instruction, the differences between the real exam and when you are doing it practice. And this you can do multiple time, okay, the same question. And you can even see how, you can even mark yourself, you can see how well you are doing or not. At the end I will show you that also. Okay, and if you want to remove something, go here and remove highlight, it will remove it for you. Okay, and when you open here, you can always make this page small or big, you have that thing. Okay, here we don't have at the moment. Yeah, here, this on your bottom right hand side, only from here you can adjust the page size. You see, you can make this small, you can make this big. Why? Because sometimes you want to put multiple windows you want to open. Exhibit 3, let's say exhibit 2 also you want, so you can adjust the size from, you see, you can make it big, small, this only from this side it's possible. So like this 2 you can keep like this. Okay, and if you don't want, just close everything. Fair enough, you keep the highlight. You can even change the highlight color. If you want a particular thing to be highlighted in yellow, particular thing to be highlighted in green, you can do that. Strike through, strike through will cut. Okay, we usually don't need that, I mean that function is not used usually. And here you have your calculator, you don't have to carry your calculator with you. Here itself the calculator is inbuilt for you, the scientific calculator. Make sure you know how to use it. Okay, so let's say 5 plus 5, enter. Okay, You can use bracket here, you can use long calculations here, but because we have Excel, we don't need calculator so much. Maybe for small things we can take the help of the calculator. Okay, let me tell. Okay, let me show you the complex things. For example, for your option pricing, you can use logarithm. You see log is there, log function is there. Then we have x squared or x to the power something. Let's say you want to write to the power something, so 8. Okay, you press enter and this sign. I think you can see my cursor on the screen. To the power, let's say 5, enter. You see, so that's how you can do. Squared is already there. If you want to change cube to the power 3, 4, 5, you can use this. You can change it. We'll definitely use a calculator and I will show you how to use that. This thing, other things we don't have to use like probability data, mode, table, all those things is very advanced function. We do not require it for AFM. Only easy calculations. Okay. Now we have a scratch pad here. Scratch pad is basically like your rough notes you can write if you want to do anything. It's like how you do rough calculations in your paper. This is your scratch pad. And the good thing is because it's on a CB platform, you do not require any extra paper or anything. As much as you can do, you can input here. There is no limit to this. Okay. And make a good use of it. Now, here we have down if you see. Okay, before that, we'll see here. Navigator. You click there and through here you can see how many questions you have attempted. Now the problem with this is even if you enter something, let's say here it says attempted question 1. Why? Because I have put something here. I have entered something. The moment you enter something either in your response option, right? Either in your Word or spreadsheet, the navigator says question is completed. Okay, so through there you can see it's completed or not. Now let me remove this. Go to the navigator. I will refresh it and see. Go to the navigator. Okay, attempted. Okay, I've not entered though, but maybe because I have done it the first time, so even if I remove it, I think they are showing attempted. Okay, so the moment you leave it empty, it will show unattempted. Okay, the moment you put anything, it will show attempted. Here's just one question, but in your actual exam there will be 3 questions. Okay, and suppose you want to do a particular question after some time. Let's say question 1 some things are left, you went to question 2 and 3. Later if time is there, you want to come back to question 1 and you must have forgotten also that there are some things remaining in question 1. This navigator is always a good thing. Why? Because through this you can see, for example, you can keep it as click this flagged or review. That means you later need to come and visit this question. It has some things unleft. You see, sorry, it has something left here, so come back and you can always check. Having this flag means you need to come back to that question. You can use it. Even here you can see that flag for review. You see, the moment you have done it, you have completed, remove the flag. Just click it. So you can go to next. When you go to the next, it will take you to question 2 and 3. But here since it's just a blank workspace, it will just show question 1 and that's it. Okay, you need to make sure that you don't have any red flags. Everything is done. Okay, and when you want to review flagged, everything, there is no flag. You see, it's white. Review not attempted. You can check or review all. Anyway, once you want to end the exam, come here down and end the exam. It will end it for you. But right now we'll not do it because we have to do this question. After that I will show you how to end the exam and go and mark it. This will take a bit of time because this is your first question, and so anyway, let's go back to question 1. Click that question 1, you will go to, it will take you to that question. Okay, and suppose you have opened multiple windows and you want to close them all at once. Go here. I think you can see, right? Close all. It will close all the windows at once rather than you individually closing each one, like each one, right? Now help and formula sheet. Here This is the area which you need to visit often. Okay, so if you go here, you can see workspace help, formula sheet, and your exam instructions. Exam instructions and all you don't need in the day of your exam. This you must have read before coming to the exam, right? Here you can see what is the difference between the actual exam and the real exam, right? This will help you a lot. Please make sure that you read it on your own. You see here the difference, CV practice platform and live exam. How the windows will look like, what are the differences they're showing you. This is a very important thing. Every one of you who are going to attempt AFM needs to read it on your own. This is very pretty easy, nothing hard. I don't need to explain that thing. Then we are going to the formula shed. All your formulas are here. Okay, let me show you, take you through it. We have Modiglian and the Miller's proposition 2 with tax. This we usually use when we have adjusted present value calculation, where we have to find ungeared cost of equity. Okay, and in this one we need it. Let's see. Then we have capital asset pricing model. We know that. Asset beta formula. This you need for WACC. Growth model we have. Okay, there are two. One is this is dividend valuation. Gordon's growth approximation. B into R, where you are given the retention rate as well as the cost of equity to find the growth. Next we have WACC. How to calculate WACC is also there. Fisher's formula, that is for interest and inflation. Then we have purchasing power parity and interest rate parity. This is to predict exchange rates. Okay, we have gone through this in the previous lecture. Then we have MIRR, modified internal rate of return, that was explained in lecture 1. Okay, then we have Black-Scholes option pricing model. I think it was in lecture 2 if I'm not mistaken, where I explained options. There we use this heavily, right? We need log and all those things. Then we have put call parity relationship for valuing options. Then we have the discount factor table. You see the number of years, the percentages. Okay. Then we have the annuity table. This is what we need. Okay. Years and the percentage. We have standard normal distribution table. This is, you need it mostly in your option pricing model to find D1 and D2. Okay. Make sure that you know which one is useful for which one, which question. Okay. So here you can see it is given in, this is given in 2 decimal place, that is given in 3 decimal place, and make sure that you get the appropriate number. All are in 4 decimal places. Okay, that's it. These are the formulas that you have. Now let us go to the workspace help. Okay, through workspace help you will see how you have to use. Okay, all these things you can read on your own. I don't have to explain. My main thing is in the functions that is there. Okay, I have already explained you how to highlight, how to strike through, copy paste. You can copy paste from the exhibits to this thing. But some areas you cannot copy paste. All these things are explained in this. You need to read it on your own. Take your time, sweet own time and read it. But read it before you attempt any question on your CV platform. Then we have word processor response options. You see, this is how it looks like. All these tools are given. How to reset entirely. By clicking this, it will reset completely. Make sure you know those things, because if you reset everything, everything is gone. Again, you have to do it from beginning. Sometimes you just have to delete just a specific type of information or what you have written, not the entire thing. So be very careful. You have to know the tools. Don't take this Excel and this word processor as the one which you use in your laptop. There are differences with this. Okay, copy paste, cut, copy paste, we have undo, redo, we have. I'm just briefly taking you through, but the details you have to read. There is no shortcut in that. Find and replace, bold, italics, underline, strike through, subscript, clear formatting, bullet. You can put tables. You can write in different paragraphs. Like align, left align, center right align. Then we are coming to the spreadsheet. My focus is on the spreadsheet. Spreadsheet is a bit easier. Okay, but you need to see these things. You have to read all those things. Now, I am going to go, it has similar functions compared to Word. Okay, You can color the cell. You see, coloring cell might be useful to highlight your main answer because there are so many numbers in Excel, so that you can use self fill color. You can number format, change the format of the cell, currency format, in which way you want the currency to appear, percentage format, fraction, date, time, all those things. My main focus is here, the commonly used spreadsheet formula. This is my main area that I need to target. I will increase the screen for you so that you can see it better. Okay, so we have sum function. Sum function is very easy. Just take the sum, drag the cell that you want it to add, and this will only happen with the numbers. If you include anything with the number, it will not. So make sure it's in number. Drag it, you will get the sum function. I will show you all these functions. I'll be using it and I will show you, don't worry. Average is also similar. Take the average, drag the cell where you want, for example from B2 to B15, and just, okay. Then square root. Okay, square root, we have a function of square root, thank God. But you can use your calculator also for that if you want to find. Okay, for example, in particular cell you want to find the square root, and in that cell the number was 4, so the square root, the answer will be 2. But you can use a calculator also for this thing if you want, it's fine. But I always prefer using Excel over calculator. Why? Because Excel, when you change the number, automatically your answer will change. So that saves a lot of time. If it's in a calculator, every time you have to enter the number. If things go wrong through calculator, you will not understand. You will not be able to identify where the mistake was. In Excel, everything is there. You just need to change. And it's easy to correct mistakes. Power. Okay. Power if you want. Okay. Just write power equal to power. Okay. 3:2. You have to write it in bracket like this. 3, 2. That means 3 to the power 2. That means the answer will be 9. First you have to write the number which will be down, then the up to the power 2. Here you cannot write it in any cell. You can write the number only itself. Then we have count function. Count is also easy. Just count. Drag it in appropriate cell wherever you want to count, and then just write count. Okay. See, wherever the functions is, I'm going up. Sum function, you have to write sum. Average, average. Okay. And if it's square root, for square root you write SQRT. Power, power. Count, count. Equal count. So these things are pretty easy. You can round up also. No need to break your head to you rounding up. Let Excel round it up for you. It's more better. Round. For example, you write round C4, that is the cell, comma 2. What does it mean, comma 2? That means it will round your answer to 2 digits. If you wanted to round it to 3 digits, it will be comma 3. If you wanted to round it to whole number, then comma 0. Okay, I will show you how to do that also. I will show you all this function, don't worry. Maybe not everything entirely in this question. We don't need all the functions, but we still have questions, right? In the future, we'll be doing questions, so don't worry about it. Then we have logarithm for our option pricing. Remember? So for logarithm, just write log, click the cell, and comma 2. Click the cell means that number, and 2. 2 is the base. If the base you want it to be 2, then 2, otherwise 3, whatever it is. Then we have, wait, just give me a minute. Okay. So these are the two things. One is net present value, one is IRR, which we have the function. You should know the manual method as well as this functions also, because this function at the time of your exam will save a lot of time. If you know this, it will work out, but you have to use it as a backup, not as the actual this thing. Okay, so for net present value, write net present value. Okay, you see here equal to net present value comma 0.1. Why 0.1? This is your discount factor. If it's 10%, 0.1. If it's 20%, 0.2. Okay, then you drag the cell till where you want the net present value. But when you're taking the cell, all are inflows. Okay, future cash flows. Okay, those are your future cash flows. We'll see that. We'll use and see. Will you do through both the manual method as well as using this function, and we'll see are we getting the same answer or not. If we are getting the same answer, good enough. IRR we don't need in this question, but we'll see. For IRR, just write equal IRR, comma, take the cell from where to where you want, that is your cash flows, and comma 0.12, that is your discount rate. You're using an optional this thing. Okay. Yes, see that rate. A rate you think is close to the result of IRR given as a decimal. You have to give it as a decimal. Let's say 12%. Already one discount you have. Let's say 10%. But with that 10%, you are getting a positive return. So now you increase it to 12%. So that amount, that estimate discount factor only you have to write it here. Not two decimal, not two discount thing for IRR. Okay, 0.12. It has to be in decimal. It has to be in this format. So make sure that you read on this. That's it. In this, maybe we need the net present value. Okay, you can always multiple time you can open this. You don't have to memorize it. Since it's already there, don't waste your power to memorize these things. Close the window. I'm going to open my spreadsheet. I only need my spreadsheet here because the question says calculate, if you remember. Okay, so now step 1. Okay, you need to calculate your base case net present value. Right, I'm going to write it. Click, double click. Okay, if it's not typing, double click the cell. Step 1. Base case net present value. So first, what do you need? I'm going to take this cell. I'm going to make this bold. Okay, always make it very presentable. It should look very presentable. Okay, or otherwise do every working. Okay, at the end also you can make it presentable. It does not matter. What do you need? Do all the calculation first. You need a WACC. You need a discount factor. So for discount factor, you need to use that formula, but make sure that in each cell you write the things. For example, equity beta, or you can leave a space and write equity beta. Which equity beta are you using? The proxy companies. Make sure that all this you list in one cell. Okay, I'm showing you the way that saves a lot of your time. 1.368 is your equity beta. What else you need in that formula? Tax. What is tax? What is the rate of the tax? 30%. Just write 0.3. What else? VE and VD. Equity and debt. What is equity? How much? 5 is your equity. Debt is 1. Because 1 is to 5. Now what do you need? What do you need? You need equity beta. Sorry. I'm sorry. You need asset beta. Okay. This also you can bold. You need your asset beta. Now is the time you do your formula. You don't write the formula. Which formula are we using? Formula sheet. It's up. Right. This is the formula. Okay. Not this portion. Okay. The second, after addition, the second portion we are not doing it. It's 0. Only this much. VE divided by VE plus VD into 1 minus 10 into equity beta, you will get your asset beta. But we are not writing this formula. We already have the number. Just put it, just use it here. Okay. How are you going to use it? Put bracket. Or if you don't want to bracket, okay, without bracket, equity beta. Click your equity beta. Multiply by, okay, the multiplication sign will be shift and that star, okay, which is number 8 here. Shift and 8. I don't know how in your this thing it's there. For in my laptop it is that star is with number 8. So shift and 8 will give me this star sign. That means it will multiply. Multiply with what? Equity beta multiply by? Come on, tell me. VE, that is 5. Okay, here you can put bracket. Okay, divide by. Divide is that slash. You will not get division in your laptop, so that's slash. Okay, divide by VE plus VD into 1 minus tax. So VE is what? 5 plus VD is 1. Okay, into 1 minus tax. Again into bracket 1 you have to write minus tax. Close the bracket. What do you think the answer will be? Present term. So I will make some mistakes and I will show you through errors also. Okay, it's not that I'm going to perfectly do it. Tell me whether this is correct or wrong. If you have common sense, you should be able to tell me this is wrong answer. Look at equity beta is 1.36, whereas asset beta is 2.3. How can it be more than equity beta? It definitely has to be less than 1.368. Now you see where I went wrong. Somewhere I went wrong. Where? Here, when they did addition, they first added and then they multiplied. Whereas they should have first taken the debt into tax and then added with equity. Okay. So what should I do? Put bracket here. Now press enter. Okay, now it's the same thing. Wait a minute. Press enter. No. So this you can do it in separate stages. Okay, let me put a bracket here. Okay. You see what happened? Just me by changing, by putting a bracket, everything changed. Now the answer is correct. It's less than 1.368, 1.2. Click here and check here. After B3, I put a bracket. Okay, divide again bracket. Okay, plus again bracket because this needs to be multiplied first. The debt with the 1 minus tax, then you add with equity, then it will be equity divided by that one. Okay, or simply if you do not want to do this 1 minus tax, you can always write 1 minus this tax. Like that also you can do 1 minus this. Okay, always you have to put equal sign, if otherwise it will not perform the calculation. Equal 1 minus this after tax. So you can just multiply this rather than doing 1 minus tax. In that way also you can do. Okay, you have now an option. It's up to you, does not matter. Same thing, this 1.2 let us do through calculator. In case some of you might prefer calculator is easier, you can do this in several steps. By the way, I will show you that also. I will show you all the possible ways, and then I will leave it up to you how you want to do in one go, like this, like me, or you do not want to take risk and want to go step by step. That also can be done. So clear. 1.368 multiply by, what is the number? 5. Divide by. When you want to go like this arrow will help you, and then bracket. Again you want to come like this, again bracket. 5 plus, again bracket. 1 into, again bracket. 1 minus 0.3, close the bracket, enter. You see, but so many brackets you have to put. That is the confusing thing. So you can solve this issue if you do not want. If you are not a person like that who gets confused with too many brackets, who do not want, don't worry, go step by step. It will be a little longer, it will take a little time, but it's okay. Keep this as it is. Okay, So you know 1.368 multiplied by, okay. Just do the down part, that's it. Equal to 5 plus 1 into, now put the bracket, 1 minus 0.3. Downside only you have to do. 5.7. Okay. Next is easy. What is it? This multiply by equity 5 and divide by 5.7. Here you do not need bracket. Automatically it will show you 1.2. You see? Here when I go here, just this part you need to do separately. Rest all you can do. So I will. You can either make it bold to show that you need this answer later on. Okay. And I always prefer making it bold or highlight. Don't highlight the cell. You can highlight the main answer. Maybe the main adjusted present value. But this you can just bold it out to show that. So you see there are 2 ways to calculate. 3 ways in fact with the calculator. Do not get stuck in one thing. There is always multiple ways of calculating a thing. If you are not able to do it in one way, do it through another way. But answer has to be same, whatever method you use. That is the whole thing. In AFM, we are not forcing students to go by one method and memorize it that way only. No. As long as you get the answer, fair enough. You will get your marks. Now, what else do you need? Tell me. This is adjusted present value. You need ungeared cost of equity. Ungeared means asset beta. Asset beta is also known as ungeared. There is no financial risk. This only itself you can use it in CAPM. Sometimes they purposely give you equity beta to get you confused. You don't have to use equity beta. Normal net present value, yes. Here, asset beta only you have to use it in your CAPM formula. So you can write CAPM. Or if you do not want to write CAPM, write cost of equity. Okay, I think that makes more sense. Even if you are using asset beta, you must be thinking it should be cost of asset. No, write cost of equity. Make it bold. Here, you need to do the functions again. What is the risk-free rate? 10%. Okay, we'll write with percentage and see how it works. With decimals, we know it will work, but we'll see with percentage. Plus, what is the asset beta? Don't write 1.2. Once you have calculated the answer, click that cell. It's always easier to do that. Multiply by, again bracket. What is it? 15% the return minus 10%. You can see up here. Okay, you can go here also and type the formula. Up you can see, if you see this cell is very small, go up and do it. It's fine. 10%. Sorry, 10%. Close the bracket. Enter. What is the cost of equity? 0.16. So it does not matter whether you do percentages or decimal, you will get the same answer. 0.16 only you will get. But you have to convert this into percentages. You manually can write it here, 16% like this. Or you can change, you should know how to format. Okay, like this also you can do. There is no harm in that, but I will show you the other way also. Suppose you go here, format. Okay, not format. Okay, yeah, here you click, you can see here percentage. Click that, and now it's up to you whether 2 decimal places or what you want. 1 decimal place, 16%. Here you have to click 0.00, then it will take it to whole number, 16%. Okay, so do not worry. The moment someone clicks on the 16%, examiner is going to do this. They're going to click 16%, the formula will be out here. They can see the formula. So you do not have to write capital asset pricing model formula. Risk-free plus beta into risk market return minus risk-free. You don't have to write it, just the number. We are already interested in the number. You're already using the formula. When they click the formula, examiner could see you have used the formula. If you're writing the formula, you are wasting additional time. Make it bold. Wherever things that you are finding, answers, make it bold. I'm just telling you, I mean, there are other ways you can write. It shows that this is the working, because you need it. You need 16% later on to discount. So this is your discounting this thing. What else? What else do you need in your this thing? Think. Tax allowable depreciation. These are the two things that you need. So tax allowable depreciation also, make sure you keep it ready. But when you are doing workings, even if it's just working, some of you just write number without labeling. Please clearly label. What is it for? This is step 1, base case net present value. Like this you have to write. Okay, and you're finding what? WACC. Or maybe you can just write to find step 1, base case net present value. This is working 1. To find discount factor or cost of capital, anything. You can write like this also. This makes, I think, more sense, no? For base case net present value, you need 2, working 1, discount factor that you have got. Now what do you need? Or maybe you can underline this also. You see, underline. What else do you need? Tax allowable depreciation. This you can label as working 2. Anything, you can do it in any order. Does not matter, order does not matter. Tax allowable depreciation could be a working 1 and WACC could be a working 2. It's okay. But you have to label it. Working 2 is what? Write TAD. You can write TAD, it's understood. Okay. So in this, you see, if someone comes and opens this page, clearly they can understand what I'm trying to do here. You have to present your answer in a way that anyone will be able to understand. Not like you're writing tax here, ED somewhere here, DED somewhere here. Some numbers you're not even writing. Imaginary you're just importing from somewhere you have taken from the exhibits without mentioning it here. No. Make sure that you write like this: tax on one cell, ED. Okay. This is very clear cut. Through this I can understand all my workings. Now, working 2. Now, how many space you have to keep is up to you. 1 space, 2 space, 3. Don't keep too much of space also. Okay. What is the tax rate? Maybe here I can write tax at 30%. Yeah, 30%. This thing's adjusting of the column, the size, the width is up to you. However you want. But I always adjust it because I want it to look very neat. And here you can adjust if you want it to put it in the center. Center looks better, right? And I'm going to enter the dollar sign here. Symbol, insert. Symbol, insert. Both. Okay. Now, what is the cost of the machine? Cost. You can just write cost if you don't want to write the whole thing. It's 450,000. 450,000. Let me put comma 450,000. Okay. Next, first year allowance. First year allowance. You can write FYI. It is at 70. Make sure that in the bracket you write what percentage. Rather than just applying, obviously you will apply 70% to that answer. But next to it, write for tax also, right? It's at 30%. FY at 70%. It makes it very clear for examiner as well as you what percentage did you apply. So FY is at 70%. Okay. Now equal to. Okay, just take 70% or 0.7, multiply by this and enter. Automatically you will get the answer. Okay. Since this is without comma, okay, so make sure that this is also without comma. Otherwise keep both with comma. Be very consistent. Okay. Okay, I will go here. Okay, anyway, even if it shows comma, the moment you enter here is just, it will show you the figure. But here I cannot do the same thing. because it is based on a function. So I cannot go and change the 315,000 by adding comma. It's okay, it does not matter. But okay, what's next? Tax at 30%, no? What will be the tax? Equal to this into we already have the tax 30% here, 0.3, enter, 94,500. Okay, it's a reducing balance. Okay, next 2 years will be straight. Okay, so this will be, what is it? Deduct first year allowance from here and get it. Make sure this is with bracket. This is with bracket. So 135,000. Okay, after that is straight, it's equal. Okay, equal means just divided by 2. Simple. TAD year 2 and year 3. So it will be equal to this divided by 2. That's it. 67,500. And when you are taking the tax, it will be equal to this. Either you can enter it into 0.3 or just take from this cell. You already have taken the tax now, 30%, enter. 20,250. So we have everything for step 1. Finish it with step 1 before you jump to step 2. Because step 1 also is a huge amount of marks will be there. So you start with year. You have to start with 0 for base case. 1, 2, it's for 3 years, so 3 years. Okay, now what else? I will drop down the 3 zeros. So the moment you drop down the 3 zeros, I'm going to say symbol 0, 0, 0. Okay, here 0, 0, 0. Let's see it will work or not. It will not work. It will just show 0. Because 0, 0, 0, no matter however much zeros you add, it will take it as 0 only. It will take it as a number 0. Okay, so what you can do is, after the dollar, just enter something, a small text. For me, I have put it a comma or this thing like this. You see? Just drag it to the other cell. Finish it off. Rather than typing every time. This saves a lot of time. A small colon, semicolon, comma, anything, just add. So that it becomes a text rather than a number. If it's a number, it will only show 1 0. It will not show 3 zeros like this when you drop down the 3 zeros. Now, coming to the equipment. So you start with the cost. Equipment is the cost. What is the cost in year 0? 450. I'm going to show it as a negative figure. Put bracket. I will show you what happens when you put bracket, but anyway, let's put bracket now. Then we have tax allowable depreciation. It does not matter in any order you can start with. You can start with inflows, then deduct the cost. Okay. So tax allowable depreciation. First year. If you take this, let's say you want to copy 94,500 and put it here in year 1 and paste it. It will show 0. Why? Because you cannot take this number. It has a function in it. You just cannot copy paste. It will show you 0. Understanding? So when you're taking like this, copy, and you want to paste here, right click. You have to write paste special. What do you want? The value, the formula, or all? So let's say you want the values. Click on the values. You want the value. Okay. You see? If you want with the function, it will take it with the function. It's up to you how you want it to copy. Copy, then paste special, and then select the value. But here we have dropped down the 3 zeros. So if you want, it will be 94.5. You see, the good thing is if you are taking it as a value, you can do any changes with that value. But if you are taking it with the function, let's say take the second one with the function. Okay, let's see this value. This is the value, right? Copy, paste special, value is already selected. Let's say you want to calculate the formula. Okay, now let's see, you cannot do any changes with it. Or let's say you are taking it as a format, copy. You should know everything. You should explore all those things by doing it. Make mistake, learn, and then do. Because making mistake is also good. Otherwise, how will you know? If you take the format, it will not take anything. So just make it in terms of value. That's the safe. Copy both the cell. You can take both the cell. Paste special, click to the values. It's not taking it to the other cell. To take this plus sign and take it like this, you see. But here also you have to drop down the what? You have to drop down the 3 digits. How do you drop down the 3 digits, by the way? You can format this thing. Go here, click both the cell, go format cell, number. Okay. Let's wait a minute. No, that's not correct. It is showing 20,250, whereas this is 94.5. It should show 20.25 for both. So it is the decimal place that you have to worry about. Okay, go here. Okay, you can undo. You see undo button is here. Go, undo. Okay, redo. Keep it 2250. Go here, both the cell. Go here, and from here you can do. You see. But the thing is, this is not 2 decimal place. You have to drop down the 3 zeros. Okay, so here you have to be little manually you have to do it. 2250, so it will be 20 point. How do you drop down the 3 zeros manually? If I tell you 20,250, just cut the last 3 digit, 0, 5 and 2. Obviously 0 if you cut it will not have an impact, but 2 and 5, so 20.25. After decimal it will be the last 3 digit. Your decimal has to be in such a place that after that you have the last 3 digit, that means 250, so 20.25. Okay, now take it to the other cell also. You see, this is how you do. You have to drop down the 3 zeros. Now what else? Operating cash flow. We usually start with inflow. You must be shocked why I start with this one, but start with the normal way how you have learned. Cash flows and all. Cash inflows. Okay, starting with 1, which is 220. 220. 220. It's 220 only. But see, this are in decimal, right? Decimal. So make sure that this is also in decimal, 0.00. Keep it in the same format. It looks very presentable. I mean, okay, so if you want to do this, just click all, go here, do it. Just click this 0 and you have to click this. Automatically it will come like this. Right? Now, on this cash inflow, you are going to have tax. Tax on cash inflows. Just take 30%. It's very easy. Take this, multiply. Either you can enter 0.3 separately or take it, but it's okay. Drag it to the other cell. 66. If you say 66, make it sure that it's in 0.00. So it looks similar to this. Go here, put it. See? And this is in negative, by the way. So if you want to make it negative, make sure before that you put a minus sign. Okay, again you have to copy paste because it will not do it in the other cells. So make sure that you copy paste like this. Automatically it will become a minus figure. Or if you do not want it to be as a minus figure, put bracket. I don't know whether bracket will do it or not. Actually bracket will not do anything. It will not make it bracket because you have to put minus figure. It's not showing. Something is wrong somewhere. Minus this. Multiply by 0.3. It is not showing that minus. It was showing before, but now it's not showing. That means something is somewhere wrong. Because you are doing it through a working. You are not writing 66. Otherwise, you could easily put bracket. Okay, make it like that. It's okay. No worries. Keep it like this. Okay. Do not break your head for this. Because when you're doing the calculation, automatically you will deduct. Right? So that's it. Just underline. Okay. So here, if you do the sum function, you can just drag. But since this is in plus, it will also be added. So you cannot do a sum function here. Okay. Rather, you can just copy paste this one. And here when you're doing equal to, okay, take this and this you add, or do sum function. No, don't do sum function. Just take this and minus this and just see. It will give you this error because you have to enter a function. Okay, sum. If this was in bracket or in minus, if you do the sum function, automatically it will do. Okay, one thing could be done. Change this to negative figure. This needs to be changed in the negative figure. Go here, format cell. Okay, the moment you cannot see this, this needs to be down. Okay, like this. Okay, format cell. You see, negative style. How you want it to show? In bracket, like this. So in bracket will show. Okay. Now we'll perform the sum function and see whether it's working or not. You have to press equal, otherwise it will not perform the sum function for you. 380.5. Somewhere something is not wrong, not correct, because 66 has to be deducted, tax on cash inflow. Or otherwise, what you can do is just copy paste this here. Okay, here when you're doing it, enter this plus this minus this, enter. You see, for the other cell you don't have to do, just drag it. Automatically it will deduct the last cell. Okay. You see, what do you need now? The discount factor, 16% discount factor, 16% DF. When you're using the 16% discount factor, the first year it will be 1. I'm going to do center line. Now you can use the table. Go here, formula, go to the discount. 16% is here. You see 16%. So 16% year 1, 0.862, 0.743, 0.641. These are the 3 unit. Okay, let me see whether we can copy paste this or not. Copy. I'm not sure you can do it or not. Paste. You can't. It will copy paste the previous one. That's why 450 is coming. So you have to write it. Okay. That's why I always tell you practice. If you do not practice, you don't know what will work and what will not work. What you can copy, what you cannot copy paste. Do not underestimate the practice. 0.641, it is 3 decimal places. Then the present value comes. This is taking time initially. It will take a lot of time if you see. Already 1 hour is going. But as you do more and more questions, you are going to do it at much faster pace because you know what you need. So just equal to this multiply by this, enter. It will not work because this is in bracket. The moment you put it bracket, it will not take it. Now normally in your Excel, when you put bracket, it is taken as a negative figure, not here. Why? I will show you why. Okay, go to format cell. You see, all number, automatically this is taken as your negative number. This one, this is the default position. So if you take bracket, it will not. Anyway, let's see. We'll change the format and see whether it's taking it or not. It will not. So don't use bracket here. The wise thing is, if you want to show it as a negative figure, use minus next to it. Okay, I will remove the bracket now and just put minus 450. You see, the moment you put minus 450, it's taking it. So put minus 450. This is how in your CB platform the minus figure works. This is what I wanted to show. Remove it from here also. Make it minus. Minus. No, it's okay because it's copy pasted. So just copy paste here. Copy paste. So the moment you do it here, this, sorry, equal to this multiply by this, enter. You see, I'm going to do it center line because for me presentation matters a lot and so should it be you. It will not take so much of time, trust me. It looks like aligning, doing all this adjustments take a lot of time. No, it does not even take a second. Now copy paste to the other cell, drag it to the other cell. You see, automatically it will multiply. Rather than multiplying all the 4 times, do it once, take it. You might want it to round it up to, you see here the numbers is very big. You have to take like this and see. And this is 3 decimal places, this is 5 decimal places. Does not look so good. Make it very consistent. Make everything as a whole number, or let's say round it up to 2 decimal places. Now how many decimal places should you round it up? It's up to you. Okay, but be consistent whatever you're choosing. I always prefer 2 decimal places as fair enough. So click all the 3 cell, click here 0.00. Automatically it will take it to 2 decimal places. See, and all are inflow, so that's why they are without negative. Now is your base You can even write it here, it does not matter. Your base case net present value. Make sure it's bold because this is this thing. How do you do that? Just the sum function. Take all the cell, close this, enter. What just happened? This is the answer. Can you present this answer? First round it up to 2 decimal places, 5.37. Then make sure add the 3 zeros. Don't write it as 5.37 only, because remember you drop down the 3 zeros only for the working purpose, calculation purpose. Final answer have to be, you have to add the 3 zeros again. When you have to add the 3 zeros again, how do you do that? Just multiply the answer by 1000. That's it. Multiply it by 1000. But again you have to round it up to 2 decimal places. You see, 5369, 5369. Or if you want it up, take it as a whole number. If you want it up to round it up to whole number, here you go and custom, not custom, with general. Okay, now I will show you how to use the rounding figure. Equal to round. Okay, take this number, comma 0. It's always comma 0. You can even write this base case net present value here. You need to go down if you cannot see all the options. Paste. You see, bold. 5369. Okay, you can make sure that you put a dollar sign to make it more prominent. Here it's working, so copy paste it to another cell here. Okay, you are copying this thing. Copy the number, not the function. Copy, paste just the value. So here you can add the dollar sign. This makes it look more better. 5369. You see, or you might get 5370, 68, 71. It does not matter. One or two digits will be here and there, but this is the answer. Okay, you can even highlight. I will show you how to highlight the cell. Go here, this one, and this thing, you see, you can highlight it like this also. And if you want, you can go back and no field and remove it, or simply maybe the font color you can change to make it stand out from your workings. So this is, so like this you can do. Now that part is over. Now is the difficult part. What is the difficult part? Financing part. And I'm kind of scared also, right? I am also nervous like hell, like how you people are going to go now. First, find out the packaging. Okay, that is step 2. Step 1 is over. Step 2, APV, or just write the financing side effect. Step 2, financing effect. Make sure that you do not when you're typing fast, do not make too many spelling mistakes. Okay, makes it look very unprofessional, and the moment you make a mistake, they will not correct it for you. Financing. Okay, how many things is there in this question? Make sure you have the question with you. Okay, okay, in dollar, we already have the dollar sign in with us, so we don't have to worry. Okay, you have to know what proportion of it is equity, what is the subsidized loan, and what is the normal loan. So equity is 60%. Okay, and subsidized debt, subsidized loan, or cheap loan, you can say. I would say cheap loan. Cheap loan, already amount they have given 90,000. Bank loan. Okay, so just so equipment is 60% of the cost, right? Which is 450,000. 450,000 is the cost. We know that 450,000 is the total cost. Out of that, 60% if you take, it will be 270,000. Now, if you want to work it out like this. This multiply by 60%, 0.6, 270,000. And the balance if you want to find out. Okay. 450 minus this plus this, enter 270,000. Okay, so this is the amount of the bank that you need. Now what else? Start with the issue cost. It's easier, that's why. Once this is done, okay, issue cost. Okay, for issue cost we have equity, debt. Okay, in one line you can solve it. So here, what is equity? It's, what is the issue cost? 5%. 5 divide by 95 multiply by equity, which is 270,000. Enter. Okay, doing rounding up and all, we can do it later. Finish it for debt also. Debt equal, wherever you're showing the equation, like for example number in this cell for equity, debt also make sure right after that only you're showing. Okay, be consistent in that. It should not be that in cell C you are showing something and then in cell D you are showing. No, keep it very consistent. Equal to, what is the debt issue cost? I don't have the question with me, whatever I can recall from the memory, I'm doing it. 0 divided by 2 divided by 98, 2%, multiply by debt. Which debt are you taking? 90,000. Is it? Issue cost on, you have to see it is the issue cost on which one, which loan? 90,000. Now round it up to whole number. Okay, we know that how. You can even put it in this cell, or you yourself can manually do it. It's okay. There is another way which just now I have discovered. You see, click here, go to okay, go to format cell, go to the number and click this number, positive one. Okay, it will round it up to whole number. Okay, so you don't have to round, you can just use that one also. There are various ways of doing, I've told you. But issue cost, you have to work out the tax. What about the tax? Tax relief that you are getting at 30%. This is a negative figure. Okay, if you want to show a negative figure, format cell, go and put minus. It will not show minus, but if you go format cell, it might put the bracket. So just wait a minute. 1 and 3. No, you are supposed to put, I think the second bracket will work out. No, it will not. This is a positive figure. It will not show. For the negative, it will show. But this is a positive figure, so okay, keep it like that. Okay. Issue cost on debt at time 0. Or you can just write D. Now I'm going to put the bracket. Copy. Paste special is the value. When you're taking the value, it will take the original value. It will not take this value because this is based on some function. So make sure that you format, take it in negative figure. No, it's not working, guys. It's not working. But anyway, I will try to make it minus, put a minus figure next to it. Yes, if you put a minus figure, it will now show it in terms of bracket. Why? Because when I went to the format cell, I made sure negative styles are in bracket. That's the reason. Now, tax relief. Because for issue cost on debt also, you will get tax relief at 30%. Equal to this multiply by 30%. Enter. It will come in a negative. Remember, it's a negative figure. So when you're putting the tax relief, what you can do is be smart enough, okay? You already have the positive figure. Do it in the positive figure. 30% multiply by this amount. Enter. When you show, it will show like this. When you click both the cell because the number is spread in both the cell. Format cell, this, okay, 551. Now what do you do? Sum function. Enter. Automatically it will work the sum function because this is a negative figure. This one, click both the cell, the two columns, because the number is spread in two columns, and format cell, this again, okay, 1286. Okay, not that one. Wait a minute. We'll again do the sum function because I want to show the number in bracket, but it's showing it in red. Okay, because they told negative figure in red. Okay, when I formatted the cell, it says red. You see here, red, but it's a negative figure. So okay, you see, you have to go and change the format. Otherwise, it will show it in red. So it's 1286. But this is the present value of issue cost on debt. This 1286. Okay, present value of. You have to label. Okay, label everything. This and control bold. Okay. Now we are moving on to what? Tax relief on loan interest. And interest saving on subsidized loan. See, don't always jump to the main thing, okay? Just a present value is nothing, just addition of everything and deduction of the cost. Main thing is you have to focus on the workings. Working has to be done in such a way, one after the other, such a systematic way that is easily understood what is working number one, what am I trying to find out, what is working two. Okay, now you're done with the issue cost of both equity and debt. So what is next? Tax relief. You can even label also. Working 1, 2, 3, 4, 5 or A, B, C, D like that. Or in Roman numbers 1, 2, 3 like that. I'm not using it right now. Tax relief on loan interest. Okay. This is just the loan interest we are talking about, not the subsidized loan. We'll come to that later. Okay. The cheap, okay, the cheap loan. Tax relief on the loan interest, the cheap loan, okay. So guys, let's take a few minutes break. Already 1 or 16 minutes we have spent. So let's take 5 minutes break and then we'll resume with the remaining portion and finish up this question. So go and have your tea, coffee or whatever and refresh and come in 5 minutes. We'll see you after 5 minutes. So welcome back again. I hope your 5 minutes break is over. When I went to the break, I realized one thing, that I made a mistake somewhere, that this one is 90,000. Okay, this bank, both are 90,000, the loan as well as this. And it is just equity, which is 270,000. So that's why when we took the issue cost here for the debt, that 90,000 is on the bank loan, not the subsidized, because subsidized does not have issue cost. Okay, so that's the thing I wanted to correct. Now we stopped at tax relief on loss interest. Sorry, on loan interest. Okay, you have to find the bank loan first, the gross value of the bank loan. Gross value of bank loan. When it's a cheap loan, I will mention it, it's cheap loan. Okay, you have to be able to differentiate the both types of loan. Do not get confused. Okay, so when you're taking it, remember issue cost needs to be added with the amount of the loan. Okay, so what is the amount of the loan equal to? It is this 90,000 plus what? The issue cost here, 1837. Don't take the negative, otherwise it will deduct it. You have to be wise enough. Add. And when you see, okay, just go format cell. You need to go down. Format cell number this. Okay. Okay. Don't worry. The moment someone clicks on the cell, they'll be able to see your workings. So you don't have to worry about it. Okay. Now comes the annual repayment. This is a bank loan. Remember, when you have to find the tax relief on the loan interest, you first have to find the amount of interest, To find the amount of interest, you have to first start with the repayment. We have done a question on this. I've shown you also how to do the annual repayment. So annual repayment is, you have to use the annuity factor. Which annuity factor you have to use? This project is for how many years? 3 years. And which percentage are we using? The subsidized or the normal bank rate, normal rate? Okay. And the annuity factor is 2.487. So it is this divided by, okay, undo, equal to this divided by the annuity factor for 3 years with the normal interest rate, not the subsidized interest rate. That is 2.487. That will give you this amount. Go format cell, click this. Okay. Now your loan schedule, that table you have to do. And all these things has to be done at a high speed. Okay. So initially it will not happen, but you have to keep practicing. Okay. Here, opening balance, OB. Then comes, make sure that you write it's a loan schedule. Okay, I told you everything needs to be labeled very clearly. Interest, repayment, or you can just write rep and CB, closing balance. Okay, short form is fine. It's fine. Bold, and then you write the dollar sign, dollar, dollar, dollar sign. Okay, now I'm going to put how many years? 1, 2, 3. What is the opening balance? Just now you have got 91837. Okay, this, copy paste it. I've told you paste special, just the value. Okay, copy paste special. Again you have to click it. Okay, it will already be there, then the value. Okay, the whole value came. Anyway, you can round it up. Format cell number, this. Okay, 91837. What is the interest? Interest is 10%. I'm just going to make it a little bigger. Interest is 10% on this figure. Enter. If you see, the number is quite big. That's why you're not getting all the number. But you have to round it up. Okay, make it bold because this is what you're finding out. Bold. And the repayment. What is the repayment? Repayment amount, you have just calculated it. This. Copy, paste special, the values. Okay. Oh, okay. Anyway, we can always round it up. It's fine. And then the closing balance is nothing but equal to this plus this minus this amount. Enter. And this also format cell. Okay. Okay. So you can just copy it here, paste. It will ask for reference. Why? I told you, copy, paste special. The value or the formula also you can take. You can just take the value. Interest. Now, just copy paste it. Drag it to the other cell. Automatically it will take 10% of the previous value. And when you're taking the repayment, it is this. Just take this. Okay, drag it to the next cell. And then when you're taking this, you can just drag it to the other cell. Because formula is already there in one cell, automatically it will take. Here, copy paste. Okay, you have to format cell. Okay, next. Okay, bring it down like this. No, this plus sign should come. Okay, no, something is. Okay, now this plus sign should come. Drag it. This will be same. And then you can drag this also. The plus sign should come. If you see, as I told you before, it should always be 0 because whatever you are taking the loan, at the end of the time it has to be 0. But the 7 is due to rounding differences. Okay, because you have rounded up, that's why. But we ignore it, and that figure will be very small. Now what's next? Tax relief. Tax relief on the 30% interest. Tax relief is 30% on the interest, right? Tax relief at 30%. tax relief at 30% on interest, non-interest. Okay, now another table you have to make. But remember, when you're taking the interest, you have a subsidized loan also. Now is the time. I didn't leave any space to calculate the subsidized loan interest. That is fixed. That you have to add with this interest. This 3 interest that is in bold, you have to add your subsidized loan, that is 90,000. What is the interest for the subsidized loan? 3%. So 3% on that 90,000, which is 2,700, which we know, verbally we know. But you cannot just write 2,700 like that. You have to show that working there. Okay? Because some of you, I know, what will they do? Take 3% of 90,000. They know 2,700. They will just add 2,700 with the interest calculator. No. Even though you will get the marks, but not full marks. Because you have to show that working how you got that 2,700. Even if it's the easiest step, you have to show it. So, since I didn't leave any space, let me click this here, 61. This one, okay. If I see here, can I insert a cell? I don't think I'll be able to do it. Like how in normally in Excel, what do? You can insert a new cell above it or below it, a column or a row or this thing. But in this condition, it's not happening. So what do? Copy paste it maybe here. Okay, and remove it from you. This is the only way you can do it. Okay. Now, so for subsidized loan, my spelling will be wrong. It doesn't matter as long as you get the concept and know how to calculate. That's what matters. Here you can put it. So 3% multiply by 90,000, which is 20. No, it's 90,000, 2,700, and this is for all the 3 years. It's fixed. So now let's start. Okay, you again start with year 1, 2, 3. Cash 10%. You need to see when you discount, use 10%, the normal rate. Okay, whether whatever loan it is, present value. This is in dollar. In dollar. This time I'm not doing any formatting, anything. I'm just going ahead with it. So you add both the interest and just apply 30% equal to this plus this. Enter 30%. Now see without bracket what happens. It's correct or not? It's wrong. It is wrong. Why? You need to put bracket when you're multiplying. Because first both needs to be added, then you have to take 30% of it. Now you see? The answer is 9 something. How can it be bigger than this interest, right? Keep the number as it is. At the end, you can take everything and format. See, whenever the formatting stuff comes, do it at the end only, okay? Rather than doing individually one by one. Same here. When you're taking here, equal to bracket, second year interest, add with 2,700, close the bracket, multiply by 30%. Enter. And third year, bracket, this plus this, close bracket, multiply by 30%. Enter. 10% factor, we know for year 1, 2, it is 0.909. You have to type it, okay? You cannot copy paste from the table. We have just seen it previously. 0.7513 decimal places. You don't have to manually do these things any longer. Use the table and save time. Now, do everything as format cell and this. Okay, at once. Present value, just multiply this with this, enter. Until this plus sign comes, you have to keep waiting. Okay, then you drag. Format cell, this, and okay. Just check. And finally, it will be sum function that you have to use. Just drag all, enter. This amount also. When you're taking, take both the cell and click together because the numbers are in two cells, two columns, format cell and this. Okay. So it is 6863. This is the amount, the present value that we have been looking. So make sure this is in bold and highlighted also, underlined. Or maybe in red you can put. But make sure that when you have a habit of putting it in bold, let's say the sub answers that you need for your adjusted present value. Let's say the first one you have highlighted in yellow. Make sure the others also you do it in yellow. Or you have tried to change the font color or make it bold. Make the others also do like that. Be consistent. If you do something for one thing, do it the same way further. It should not be that you are highlighting one answer, making bold the other one, changing the font of the other one. No, it becomes very confusing for you as well as for the examiner. So let me see what I did for base case net present value. It was in red. So I will make sure this is also in red, or you can do it like that. Okay, we'll keep it as bold for now. But in the exam, be consistent. I mean, while practicing, you have to be consistent. Automatically in the exam, you will be consistent. Do not waste so much of time to decide, should I highlight, should I make it bold, which color should I highlight, what color should be the bold, should I make it bold. Do not waste too much of time on these things are not so material. Okay, just decide anything and stick with one, that's it. Focus more on the calculation. Now interest, next working, interest saving on subsidized loan. See, whenever it's like this, I will show you like this, right? I have this habit of making it like this so that it comes in one column. If you also have it, do it. It's better because it looks very presentable and I mean, if you see from your eyes, it's very friendly also, user friendly for your eyes also, rather than being in 2-3 separate cells, the columns. Next. So we are almost towards the end. After this, we just have to go through the add everything. That's it. Saving. Okay, what is your saving? Equal to, what is the amount of your loan? Okay, 90,000. I'm not going to that cell. Okay, you can just enter 90,000. Multiply by, what is the difference between the rate? Normal rate is 10%. Subsidized loan is 3%. The difference is the savings, right? That is 6,300. This is per year. Every year you are going to save this. What is the present value? You can write PV for present value of saving. Post tax, after tax, okay? It's always after tax. So when you're taking it like this, it should be this equal to this, multiply by, put bracket, 1 minus 30% is the tax, 0.3. Again multiply by the annuity factor. For 3 years at 10%, 2.487. Okay. Just a minute. Where are we? Okay. So for annuity factor, you can always use a normal discount rate. Okay. This is the amount. Format the cell. This. Okay. Now what else? Step 3. Step 3, I can go a little bit fast. APV. That's it, the final APV. What do you do? Step by step, start with base case. Write base case first rather than financing stuff first. Base case net present value 5370. You already have it, 5369 we got, right? Issue cost. You have to label it like that and write rather than just writing 5369. How will someone understand what is 5369? It should be labeled base case net present value. That's why I always keep 1 or 2 columns for description, then the numbers. Issue cost, equity, and debt. Equity is how much? I'm just writing the figure, okay? By the way, you can just copy paste also. Issue cost. You have to go up. 14 to 11. This has to be negative again. So make sure that you write it as negative. Will not come. Paste special. Just the value. Copy. You can even add a minus thing to it. The moment you put minus, it becomes a negative. It will show it in negative. Same for debt. But debt I will only put bracket 1286 close bracket. You see what happened? The moment you put bracket, it will take it as a text, not a number. If you wanted to take it as bracket but in number, just put a minus figure next to it. That's it. But you have to format this cell. That cell is not formatted. That's why. Click here. Okay. You have to deduct because they are issue cost. Next, we have to add tax shield. Present value of tax shield. And what is it? Interest saved. Tax shield is how much? 6863. Where is it? This. Copy paste. Copy. Paste special. Just the value. Or you can just type it 6863 if you do not want so much of this thing. Value of this thing is this. Copy. If you want the formula, okay. So that the moment someone clicks here, they know from where you have taken it. That also you can do. But it will be difficult for you to change the figure. If you want to change the figure, you have to take it in terms of value. If you do not want to change the figure as it is you want to take, you can copy with the formula. And finally, what do you do? That is the APV. But take the sum function. Already the numbers are negative, it will be deducted. Enter. And make sure this is a whole number, so go and format cell, this one, okay, 7703. You see, now I can make it highlight because this is the final answer. Makes sense right now. Just one highlight, so we know this is the final answer. Now, requirement also asked you whether this project is worthwhile or not to stop with the calculation. What do you say? The project will increase the shareholder wealth by this amount. That is the meaning of this. This project should be accepted or not? This project should be accepted because it is viable. Financially feasible, you can say. This project should be, you can write it in Excel only. this project should be accepted if it's a small line like this. But if you have to write lots of discussion on it, for example report writing, you need the help of the figure, then definitely you need to write it in the Word. Just copy paste the main figure from the spreadsheet to Word. Otherwise, for where majority of your things are numbers, calculations, and only this line you have to write that net present value is positive except the project, or adjusted present value is positive, the project is financially feasible except the project. Only if this line you have to write, you can use Excel for it. You don't need Word for it. One line you have to write. This project should be accepted because it will increase the shareholders' wealth by this amount, 7703,000. Fair enough, right? Is acceptable. Okay. So since the prayers are going on, the azan will wait for some time before I show you the formula for net present value in Excel. So now we are done with this question, okay? And what else is left? I told you, I promised you that I'm going to show you the value for net present value, the formula that we have used earlier here. Workspace help, go down, and this formula, okay? So let's do this formula and see are we getting the same base case net present value or not. We'll go up. You have to be able to get this 5369. I will do it in this cell, okay? Equal to NPV, close bracket. You have to select a discount factor. What was the discount factor here? 16%. So 0.16, it has to be in decimal, comma. You have to select the cells from this to this, all the present value. Close it, enter. No, it's wrong. That means, yes. The mistake I did was you should not select year 0. Never the initial investment. You should leave it out. Only the inflows from year 1. 1, 2, 3. Close the bracket. Enter. You see, something is wrong because it's coming 352. Something is wrong with the formula. Just with P12 being year 1. Okay. So here, one, two, three. Something is wrong. Something is definitely. Okay. You have to take 16%. Okay. Not the present value. Before finding the present value, the discount factor, you have to find the cash inflow. This cash inflows only. Close bracket, enter. No, again it's, I think it's the actual amount that you have to take rather than this, because you have dropped down the 3 zeros. So that's the reason why it is coming like this. We have dropped down the 3 zeros. Okay. Okay, anyway, we'll put it with the 3 zeros here and check. 248, 500, 174, 250, 174, 250. Okay, now we'll try to work it out. 16% as it is, because discount factor is 16%, and just take this and this, close bracket, enter. And from here, you need to deduct 450,000. This is 450, that means 450,000. Okay, so here this minus 450, 1, 2, 3, enter. And you try to make it formatted, format cell, this. Okay, you see, this is 5369, this is 5355. Little differences like that you will get, but it's almost correct. It does not matter. This is not exactly it will give you, but yeah. So this is the idea when you're taking net present value. Okay, first here, first write net present value, comma 0.16, because 16% in decimal. First the interest rate, comma the cash flow. That means before discounting, you don't take the present value. I mean, then was the issue. You have to take the cash inflow. For example, you're not able to discount after 16%. Stop it. In the exam, if you don't have time, you can use it. So just take all. But make sure when you're taking it, you cannot use 248.5 like this. Rounded figure, I mean, you have dropped down the 3 zeros when you're doing this table. But in your formula for net present value, you cannot do that. That's why again I had to add the 3 zeros back and do it. And when you're taking the cells, year 1, year 2, year 3, do not take year 0. After you get this amount, you see, then you deduct 450,000, because you don't discount that, right? You just take it and deduct it. That's what I have done it in this cell, and you will see it is somewhere in this range only. You will get a little less or a little more. It will be a little less or more here and there, that's it, but it will be around that figure. If it's too different, check this on your own and see today. Do it manually as well as with the formula and check. If you are able to get right answer with both, that means you know how to use the function. Knowing how to use the function is what is going to save you in the exam. It's not compulsory that you have to use the formula. It is only as a tool for you to help in case if you have to use it. If you do not have to use, it's good. If you, that means you are good in managing your time. Okay, I'm going to show you the similar way for IRR and other things when I do questions like that. Okay, but this is a good thing. I mean, good that Excel has done it and there is a formula like that. It's a shortcut, you can say. Not exactly shortcut, at least you have to reach till this point to get the cash flows. After that, yes, you can use the formula and proceed. But anyway, if you check with the time, it will not take so much of time. The difference is not so much, because you just have to get the discount factor and multiply and get the amount. That's it. Okay, but anyway, do not take with 450. Do not take the minus figure and then no. Year 1, 2, 3. Year 0 you have to deduct at the end, and then you get your net present value. So I hope that this video will be helpful for you. Very, very helpful, because this is the first time I have ever done a question on CB platform, and I will try to do this for the other papers also, AAA, SBL, and SBR. But there, it's easier because mostly you have to write, and writing I don't think I have to show you in the word processor, right? So you go next. I told you, let's end this exam. End the exam. And are you sure you wanted the exam? Yes. Are you sure you wanted the exam? Yes. You can see your results here. Self-marking. But which paper? Since this is a blank space, you cannot mark yourself here. Okay? You can see I have done the other papers. That's why I can see here. Otherwise, you can see your results, your performance, right? You see my performance. I've given this at this time and this at this time. So that's you can self mark yourself. So that's it for this, and let's summarize. So now that you have an understanding of APV, okay, now we are going to go through the advantages and disadvantages, because you have to know the discussion part also. AFM is just not numbers. You will be given the second question as a discussion question on adjusted present value. So what are the advantages of this method? It's a step-by-step approach, as you can see. Step 1, step 2, step 3. So because of this, it makes it very clear on which element you want to take your decision based on. Second, you can evaluate the financing package. There are so many types of financing: equity finance, debt finance, uh, subsidized loan, debt capacity. Third is, it is very straightforward compared to adjusting WACC. If you just keep on adjusting WACC that we have earlier seen, it is very complex, but having adjusted present value to measure your evaluate your investment is more easier. Coming to the disadvantages. This is based on M&M with tax theory, Modigliani and the Miller's tax theory. I'm assuming that you know what is this theory and you have not forgot this theory. In case you forgot this theory, you have to go back to my lecture and see this theory. Okay. So therefore it ignores certain things like bankruptcy risk. Say when you're going for an investment, okay, you see that especially in the financing, it is based on debt, right? But too much debt is not good. It can cause you to become bankrupt. Even we say debt is okay, it is beneficial because tax deductible, but up to a point, after that bankruptcy risk is there, which is ignored in this calculation. Second, tax exhaustion. If you're tax paying, okay, fair enough. But if you are not a tax paying in a tax paying position, it will not, having more debt will not give you any benefit. After a certain point, the risk is greater than that benefit of reduction in tax. Agency cost, right? All these things are ignored. For this things, theories are there, you need to go back behind the theory to understand it more. Then, based on this theory, it assumes what? That debt is risk-free and irredeemable. They assume it, but is it? Is debt risk-free? No, but for this assumption, they use it. And it's irredeemable. But in practical world, it's not. Next is International APV method, the last in this lecture, before we summarize everything. We talked about adjusted present value from a domestic point of view. How we explain net present value. Same way for international also we can have. For international projects also we can use APV. Okay. The international method is, these are the steps. Step 1. When you're using your ungeared equity beta. Ungeared equity beta. It is the same. You're using everything you're doing same. But this time you're using an international capital asset pricing model. Okay. They will usually tell you there's no difference. They will tell you this is the world risk. This is the world risk free rate. They will tell you something like that. I mean, usually they have not given a question until now on international adjusted present value. But if they give, it's the same, the process is same. It's just that the CAPM is international, okay? And the beta is world beta. That's it. But you have to use ungeared beta, okay? Same like domestic one. Step 2, you have to make some adjustments now. What are the adjustments? Tax relief on debt, interest and issue cost that we have been normally doing. Subsidies from foreign governments you have to do. Projects financed by loans that are raised locally. Next, restrictions on remittances. This you don't have. This you didn't go through this. But for international adjusted present value, you have this. Okay. If there are restrictions on remittances, you have to take that into consideration. And step 3, step 1 and step 2, the addition of both of this will give you adjusted present value. So that's it for this lecture. Now let us summarize what we have discussed, starting with beta. We have started with beta. We went through beta where we went through business risk that is measured by asset beta, financial risk that is measured by equity beta. Then we do re-gearing, gearing through this formula that is given in a formula sheet. Okay, value of equity will be given, value of debt will be given, taxes given, equity beta will be given, asset beta you have to find out. Okay, I'm sure you know the steps of de-gearing and re-gearing. Then we went through the problems with that WACC. Why we couldn't go with the risk adjusted WACC? Why we had to go to the adjusted present value? Because it does not cope with gearing ratio. If your gearing ratio changes, sometimes your gearing ratio changes. Risk adjusted WACC will not cope up with it. Second, It overvalues tax shield where debt is not permanent. Sometimes debt is not permanent. So the advantages is it overvalues the tax shield. You get WACC is reduced because of that debt in that. It ignores the cost of raising finance, which is, if you see an adjusted present value, they take care of the cost of raising finance, right? That's why we are studying APV. There are two approaches to this. First, base case net present value, that is the present value of cash flow, right? Normally how you find the net present value, but you are just using the asset beta instead of equity beta in your CAPM. Next is your financing part. Here, present value of issue cost on equity and debt. I've not included debt, but because debt normally does not come, and present value of tax relief. We also have the two things, debt capacity and subsidized loan, right? Those things also will be added. So that's it for this lecture. Thank you for watching, and by now you must have a clear idea of how to use Excel because we have just done it today in this lecture. I've taken you through Excel, I've shown you the formulas, I've shown you how to do question on Excel. Because this is the first question I had to explain, it took so much of time, but definitely when you do, time will be reduced. Make sure you do it in time. Initial days you will not be able to do it, it's perfectly fine, but every day you need to reduce that time until you are doing it in the perfect amount of time, depending on the number of marks. 1.8 into the number of marks. So that's it. Thank you for watching, and do not forget to subscribe to my channel. I'm soon going to reach 5,000 subscribers by your blessings, and if you would support my channel by subscribing it and also recommending it to your friends who does not know. And it's just not AFM, I also teach AAA, SBL and SBR, and I have a separate playlist for all the four subjects. Please do watch them also and let my channel grow, and don't forget to subscribe. See you in the next video.